Okay. Everything ready. So there is something in this? Something interesting in this company? Let's pull it up. Hi, what's the ticker? Hello, everybody. Where? Open? Hello! Hello! Wait, can they hear you? Say something. They might not yet. Nah, yeah, they don't hear you. 1 second. Now they
You
will.
can't hear me?
Now they can, now they can. Relax, relax, okay.
Hello, everyone.
Yeah, there you go. You're loud and clear. Yeah, let me put myself there. All right. Rock IAI or whatever. We're looking into. Let's open Charles Schwab's as
Nah,
well.
you're not gonna find them on ROIC, I don't think.
Hey, how's it going? How's it going?
It's going good.
No, yeah, we have Edgar here from Portugal. And we have Chulo, I think, right? If I'm recognizing your
Edgar,
Twitch thing.
bro. Edgar, did you hear about Diogo Jota, bro?
Oh, are you into soccer, Edgar? What do you say? Dude,
Well,
I had
even
your
if he
stream
is,
open since yesterday. I was playing. I just heard you come in. I was scared shitless. Yeah, he heard about it. Wait, what happened with who's this guy? Yoko, whatever?
he died. He's a soccer player, and he died this morning with his younger brother in Portugal.
Oh, shit. Both of them died? What was it, an accident?
Yeah, it was a car accident.
Oh, shit.
Um, it's
Damn.
crazy, bro. That guy, Diogo Jota, he plays for Liverpool.
Mm-hmm.
He just won the league this year with them. Got married a month later. And then a month after that, like just now, he passed away.
Ah, shit. Damn.
It's crazy.
Any children? Or you don't know?
I don't know. I don't know. Maybe, yeah. I mean, soccer players usually have kids young. And I think
Yeah,
his younger brother was also like very young because Diego Jota is a
Damn.
year younger than us.
3 kids, bro. Got married 5 days ago. Has 3 kids. Edgar was saying here. He died in Spain, Zamora. That's close by. Zamora.
Yeah,
28 and 26.
sad,
Jeez,
bro.
3 kids,
That's tough.
bro. What's the wife gonna do now? Golly, that's tough.
Well, they have millions of dollars, so of
Oh, really? Well, yeah. I mean, right. Yeah,
course, when
yeah. They
he
won't be
crashed,
in dire straits,
Ferrari.
but wait, what'd you say?
He crashed the Ferrari.
Oh, yeah, fair enough. At least that the insurance will cover. Yeah,
Yeah, it's just crazy, dude. Like, it's crazy how life can change so quickly.
yeah. This kid, huh? Diego.
Diogo.
Diogo Jose Teixeira da Silva. Yeah, that guy's Portuguese for sure. Diogo Jota. Damn.
RIP.
Aye, yeah, RIP. So what's the name of this company we're looking into?
Open.
Just open? Oh, it really is just open? I thought you were joking.
OPEN. Nope.
OPEN. Why doesn't it show up on ROIC at least?
It's too small to be. I don't think it's gonna be on
Uh,
ROIC.
OpenDoor
I'm just
Technologies.
using
What is the
their
market cap on this?
four
To the
hundred and something million, 460 million.
Damn, yeah, the stock has definitely tanked. Golly.
Yeah, but it's become a net. I mean, the whole thing is like they have $560 million of cash, which is more than what they're worth. Um,
Oh, okay. I see.
Obviously the issue is like they have their inventory of 2.3 billion is all houses. They cover most of that inventory with debt, right? They have 15, 1.5 billion of long-term debt, a billion of which has to be paid within a year.
Yeah,
Uh,
yeah. But they did lose a lot of cash. Well, Edgar here is saying he wants 3,000 shares. Log him in. Hashtag to the moon. Let's see. Let's see.
yeah, they burn cash because they don't make any money. That's the whole thing. It's
Right.
like the companies like this, like it's like people, like they should just sell everything and then return money to shareholders. It would be a 33% premium to the stock price. You make
Yeah.
33% money.
The part I don't get is like you see from 2022 to 2023, Their inventory went down like more than half, but their cash also went down. So what that did they have debt?
From what year to what year?
Ah, they did have. They used it to pay debt. 2022 to 2023. Yeah, they had like $1.5 billion in debt, which was already being reduced. And then they paid off pretty much all that debt. Wait, no, that's current liabilities. Well, yeah, they paid. No, they paid still off the 5.4 billion they had. They paid half of that by selling properties. They had like
Yeah,
3,000.
their whole
Yeah.
business model is this. It's like they just buy properties with crazy loan to value. I mean, normal loan to value is like probably 80% to
Mm-hmm.
90% loan to value.
Mm-hmm.
Um, and then they try to sell them quickly. Apparently, they try to sell them in like less than a year.
Yeah. I mean,
Um,
they have been paying off their debt. Like, it's like steadily reducing. At least, yeah, the
it's
long
not.
term.
It's not. Well, no.
Yeah, no, I mean, maybe not steadily, but like definitely reducing. I mean, steadily, I'd say in total. They had a bunch of debt that was long term that became current.
It's up.
We paid it off.
It's up now. It's the same. It's been the same, and it's kind of up now. But
He's
yeah, their
Edgar.
long term debt. You're right. Yeah, but that's because their debt is just coming to maturity. Like they have to
Well,
pay
yeah,
them
but if you
now.
look at that's what I was saying, look at the total debt, total liabilities. It goes from 7.3 to 5.5 to 2.6 and now 2.4. But yeah, Edgar is saying, where's their admin cost? Let's see. Selling general administrative, it's like they've reduced it a bit, but it's around 600 billion, 600 million.
Yeah, I mean,
Yeah,
in
cost
these
of revenue is
cases,
the hard one. Yeah.
this is genuinely like a flaming pile of shit. You know, like you don't. This is not a going concern as a business.
I mean, you were saying fucking 10 minutes ago there was something interesting. That's why I'm looking into it. Like, this
Yeah,
is just a
the
pile of
something.
shit.
No, but that's the whole thing. Like the something interesting is that if they liquidated right now, you would make money. If
Mm,
this company continued
right.
operationally, you're not making money. You're losing everything.
Right,
The
right.
interesting thing is that if they sold all their assets right now,
Yeah.
the value of those things would be worth more than what the company's worth. Like closing down shop would return money to
Yeah.
investors. It's just that
So then,
in
so it's
these
kind of
cases,
like it's a bet on the. So it's a, I guess it's a bet in the assets. Then it's kind of like if you think real estate assets are gonna go up, then you buy. But it's like, is their
yeah, it's
inventory
like
even
that.
that
Yeah,
big?
well,
Yeah.
that's what they call cigar butt investing or whatever. Like this is what it is.
Would this be that? Because I feel like they're not in
Yeah,
that position. Yeah, they're not like they're losing money, but they're losing less than the cash they hold. Like much less. I mean, yeah, obviously, if not, they would just be dead, right?
it doesn't matter, bro. Like look at their revenue. The revenue is 15 billion
And
down to
to,
5 billion.
yeah, but it's like it's kind of like in line with their cost of revenue. I mean, that doesn't say much. I mean, but it does say much because if they're a dealer company, like they're just it depends. Like some years they're gonna buy more, and some years they're gonna sell more. You know what I'm saying? I don't know.
No.
It's a weird business. Like, what the hell they do? They just buy things and then sell them. So it's like,
Yeah, they just flip houses and like have like a UI behind it that nobody uses pretty much. No, no,
yeah.
no. It's
Okay,
not.
so
There's
we're not
no.
looking at it.
It's not. Yeah, I promise you.
Okay.
The
Also,
issue is
by the
that
way, yeah. Sorry, my bad.
perhaps like when you buy stuff like this, saying like it all sounds in theory it all sounds good. You're like, oh wow, like I don't know if you remember back in the day the company Wish. It was
Yeah.
like Temu before Temu,
Yeah, I remember
right?
Wish. Yeah, when it's still around, are
Yeah,
they?
like a shitty shopping site. There was a point in time where they had like almost double their market cap in cash, and the company was failing miserably, right?
Uh huh.
And then Elliot, I think it was Elliot, it was like one of these activist investor shops. They said
Yeah.
basically this
Okay.
is a letter. They bought like 20% of the float,
Uh
and they
huh.
sent a letter to the management, and they're like, "Hey guys, like no shame in in admitting defeat.
Take the L.
Letting me
Go
out."
home.
They're like, yeah, we could all make some money, and you know what I mean. We could all live, like, we could all make some money and go home with cash and everything like that. And they didn't do it. They're like, they wrote a press release saying like that they have all these strategic initiatives and like they were gonna turn the company around and they fired a bunch of people. They hired a new
Yeah.
CEO and all this kind of stuff. Just a public image thing. And then within, I think it was like within a year and a half, the company just went bust, and then nobody made any money.
Yeah, they're fucked.
So, yeah.
Yeah, like something like that. I get that. By the way, let's because we lost the video for the previous one for these people watching this on YouTube. On the previous video, we came up also that way we can get started. We looked at
Yep.
some comments. Oh, Edgar was saying here, by the way, he's like not making money from flipping houses is crazy. I guess. I mean, I don't think they do like flipping houses. Like they don't renovate the properties, right, and things like that. They just buy and
No,
sell, right?
they do.
Oh, they do.
They do.
Oh, okay, okay.
They
Well,
renovate if necessary. They try. They don't try. They try not to, but they do if necessary.
okay. So we're basically doing
Yeah.
some pre. Huh?
Uh,
No, I was just gonna move on to kind
I
of
was gonna
say what we were
respond to
working
that.
on.
Yeah, just to cap up the point that you're essentially flipping houses requires usually like putting significant work into them or waiting. Like time obviously is your best friend with real estate, but these
Hmm.
guys try to flip the houses within a year so that they can like freshen up their balance sheet, and that's probably why they make no money whatsoever.
Yeah, got it.
Yeah, that's all.
So yeah, basically we're doing pre-screenings for the companies that we're gonna select. So we were looking at the consumer staples sector. Here are the companies. These are from all the sectors that Evan is interested in. So we added them here. Actually, most of them I'm also interested in. So these are ones that we definitely look at. But then beside that, we're just doing our own like little screening. I'll show you guys the criteria that we've used. And these are the companies that we've selected so far in consumer staple, which is Coca-Cola, PPC, which was this? I mean, let's just open the screener now. So a screener, for those that are not familiar, is basically you set a series of criteria and then it checks for all stocks and only shows you those stocks that match the criteria. Where did I get to the screener? Research? Research tools? Yeah, stock screener. And then my saved screens, consumer stable value. There we go. And then in here, by the criteria that we put, basically we're looking for companies that are growing at least 1%. So like the minimum, just growing. Last 3, 5, and the last year. That they have price to earning less than 35, so they're not expensive, I would say, but they're not necessarily cheap either. Or yeah, it could be either. And then a growth in earnings as well, just positive growth, at least in the average of the last 3 years and the average of the last 5. We're looking at things that have a profit margin, which obviously if they're growing earnings, they must. And then we're looking for something that has a certain return on invested capital, in the sense like the money that the company puts or spends on equipment or whatever allows them to continue growing their business. We want to see a good return on that, showing that the management is good at using their money instead of returning to shareholders. Then we also look at having a cash flow that is positive, and we look at that's pretty much it. Yeah, and a market cap above, what is it, 100 million or something like that. And yeah, so the ones that we
Yeah.
selected so far is PPC, which we have here, Pilgrim Sprite Card, which what was it, like chicken? No, was it chicken? Was it
Take-
yeah, these
yeah.
people are the chicken people, right?
Okay.
Right, and then what are the other ones? So we selected Coke, Reynolds, and Flour or something like that. Reynolds, wasn't Reynolds the chicken one? I'm confused now. No, Reynolds is
Reynolds
the yeah, the
aluminum
aluminum
foil.
paper, aluminum foil on Tupperware, right? Or what's it? Tupperware or something like that?
Yeah, well, freezer bags, not
Freezer
Tupperware.
bag.
Tupperware too.
Yeah, Hefty Waste, Reynolds Cooking and Baking, Hefty Tupperware, Presto Products. Yeah, so like yeah, chickenware, I guess, but not chickenware, kitchenware. I was trying to say, but not yeah, I guess just disposable kitchenware. And then Pilgrim's Price, but it was like frozen, right? So frozen meats and stuff like that mainly. All right, and then those were the three, right? Oh, Florida. Was it? No, I keep saying Florida, but it's not Florida. It's Flowers Food.
Well,
Flowers Food. What are they doing? But we're gonna
bread,
try to move quicker through the screen this time.
Bimbo,
Mm-hmm.
Bimbo, and Nature
Mm,
Zone, and
yeah, bakery food products. Okay. All right.
Dave's Killer Bread. Dave's Killer Bread. That's
Mm,
you know
right.
that's their big growth engine. Dave's
Nature
Killer Bread.
Zone, Dave's Killer Bread, Wonder, Canyon Bakehouse, Mirces Freshly's, and Tasty Cake. Those are their brands. All right, but the goal is to finish on this show looking through the consumer staples. And maybe you were saying maybe even get into the next one, but let's just focus on this so far. We ordered them, right? By PE. Yeah, that's what we did. All right. Do we have a new one here? BRF? No, this is the Brazilian one. This is a Brazilian provider.
Yeah.
Yeah. Lamb Weston we discarded. So we checked the ingredient too, but we weren't not interested, I believe, right?
Yeah.
I think we moved on.
We
Okay.
should. How many? Go down to the bottom.
Yeah.
Can you
31.
share your screen on Discord actually?
Oh
Because I'm
yeah, of
on a
course,
delay.
of course, of course, of course, of course, of course, of
Oh,
course.
thank you, sir.
There we go.
Thank you, sir.
No problem, no problem. Let me also make this bigger so it's easier to see. Why is it margin here? Oh, I remember because of this.
Hmm.
So this is what we got. 31 matches at the current criteria.
I like DJs. Back in the day, uh, because Costco is like everybody loves Costco as a company,
Uh-huh.
and everybody owns it. And the whole thing is like I never owned it because it always trades at like a 50. It's like 50 times
Yeah, right. Yeah,
earning.
the valuation is a bit high.
Obviously, you pay for the premium or whatever. But
Mm-hmm.
BJ's is like the same business model, but kind of shittier. Like they have less customers. But it really like if you've ever been to a BJ's, pretty much the same thing.
Oh wait,
Um,
we do have BJ on the screen, all right? Yeah, here it is.
it's on the screener, yeah, yeah. And that's why I just saw it. That's why I mentioned it.
All right, let's check it
And
out.
I was looking at BJ's when it was like 17 times earnings, forward
Mm-hmm.
earnings.
Mm-hmm.
And I never bought it. Because pretty much everything you see about it is like they're like, why would you own
Yeah,
why
that's what I'm
wouldn't
saying.
you just own the market leader in the space, you know?
Right,
And look
right.
at how
I
it's
see.
done fantastic. Like
Yeah, by not being the market
it's like
leader, they're up 180% in 5 years, and then
yeah,
yeah, 70% in three, 30% in one. Yeah,
because
I
it's like
mean,
it's like the thought process is like if they do everything that Costco does, it's just like they're not the market leader, but it's like if you're getting a better price, your
right.
your margin of
As long
safety
as
is
they're
much better.
staying alive with a P, I mean, P of 25 is not cheap either. But yeah, like I get what you're saying. Like their EPS
No,
growth of
no, but it was
7%, though. Yeah.
17. It was 17 when I was looking at it.
Ah, right, right. Fair. It's gone up now. Yeah.
Yeah.
Price to
The
tangible
problem is with
book.
these companies, BJ's and Costco, is that their margins are very thin, obviously, because they sell cheap bulk items. But
Hmm.
you know, there's something to say, like Costco has like the lowest theft of all grocery. Like I guess if you call it groceries or
Yeah.
whatever, but
Probably
it's
because you
the
gotta
lowest
pay a
theft because
hundred
they
bucks to get a membership, right?
exactly,
Yeah.
exactly, yeah.
It's really smart because
BJ's
it's also like
good
people that are
comp.
gonna buy, they don't mind it as much, but nobody's gonna just get that to go out and take the risk to steal, right?
I'm sorry, why is Costco not in the list of their
Yeah.
competitors?
I was checking that too. I guess because they're not, these are like discount retailers, it seems, discount like grocers. Well, Walgreens? No, it's not.
I'm
Well, Walgreens? Isn't
yeah,
Walgreens like a pharmacy?
but well, it's both. It's like somewhat of a supermarket, but also a pharmacy. Nah, go to the Morningstar article.
Yeah.
Morningstar will definitely use Costco as a competitor because they're not like brain dead, Go down.
Yeah, I guess that's some algorithm doing this. Bulls say raise this
No,
membership fee. Further expansion from Costco into East Coast markets poses a threat to BJ's relevance. There it is.
there you go. No, that's a comparison. Not like
Right, but
Walgreens, bro.
exactly. It's like if you're gonna choose between Costco and BJ's, it's not like Costco is a better deal at all. But yeah,
Yeah,
these people are
Morningstar is
valuing
not.
BJ very
Yeah,
down.
Morningstar is not bullish on these companies.
Yeah, no, for sure. Or none of them really. Like at Kroger, I guess is the closest one.
No, I mean Morningstar is pretty. they're not very stringent with their price targets, I'll be honest. But, that being said, they do not
Mm.
rate these companies.
BJ is going to the moon for sure. You think, Edgar? He was also saying, did you know this? Tupperware has gone through a rough patch. They went bankrupt in PT. I don't know what PT means. Like in part. Tupperware.
I think he's talking about
Oh,
Tupperware, like
Portugal.
the
Portugal.
the
Yeah, the company.
business.
Yeah, yeah. I mean, what else are you gonna talk about?
Yeah, and well, Tupperware like is like a broad. Some people use it to like describe all,
No, yeah,
basically
but then
all.
it couldn't go bankrupt. What is this stuff? Oh, there's no. Yeah, TPQ. TPQ. I don't want to do Yahoo. TPQ. 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 Wait, here. Yeah. What? Damn, I forgot what it was.
TU, bro. TU.
Oh,
TU.
whatever. Tupperware. There you go. It's not available. Wait, these people are like small or something? I thought they were like the biggest on this stuff. I guess not.
It's okay. They're probably not based in America.
Oh, Tupperware is not an American company?
I don't know.
Anyway, we don't want to. Yes, I keep getting caught up in things, but yeah.
Um,
No,
They
they're from
are
Massachusetts,
American.
bro. They are American. Earl Tupper. Now it all makes sense. That's why it's called Tupperware. Okay. So BJ's, since we're here, let's check it out. Do we wanna look into this, guys, with a PE
Oh,
of 25?
we're not gonna look into it right now. We gotta move faster.
Well, yeah, but
It's
we
either
gotta.
you like it or you
Okay, I don't like
don't.
it.
No, no. Just ask me. You just ask me questions,
Yeah.
and I can answer them, and then we can move on.
No, I get that. I don't know. I mean, I don't know how to just do this quickly, but yeah. I mean, I'm not, on first glance, I'm not interested in this company. It seems like too expensive for something that it's hard to figure out what would be their advantage.
Yeah, there you go. Yeah, there you go. So that disqualifies every
Okay.
company above it as well.
Okay. What do you mean? Like,
You understand?
above it, like in PE,
Well,
you
yeah,
mean?
well, yeah.
Yeah, I guess. I mean,
Unless there's something
Coca-Cola.
that
Yeah.
yeah, there's some yeah,
Philip
exactly. If
Morris.
there's something based on brand,
I'm
yeah,
definitely
if there's
interested in
something based
Philip
on brand
Morris.
name,
Yeah, I'm definitely interested in Philip
like,
Morris.
exactly. So you can add KO and Philip Morris to the list, and we can move on.
Yeah, Tootsie. Well, there's still other ones like like we have Hershey's and we'll check it. Yeah, Marzetti. What is this? Vital Farms and Casey's. I don't think I'm interested in any of this, but let's see.
Yeah, we're not buying. We're Marzetti. This is just a general store. It's very popular in the South.
Okay. And Casey's is the general
Not
store you
worth.
said?
Yeah. Well,
Okay.
look what
Well,
it
it
says right
says.
there.
Yeah.
They don't have a big presence in the East Coast though. I've never been to a Casey's, but I know that they're like a Dollar Tree basically. Maybe a little bit
And,
more upscale or whatever.
ooh, what about this? The Vital Farms. Look at this revenue growth. What the
Yeah,
fuck?
Vital Farms eggs are really in right now.
Oh, they make eggs. Huh? EPS growth.
They sell
Damn. Well, they don't make the eggs. I get
chicken.
that, but net profit chickens make the eggs. Yeah, fair enough, fair enough. Return invested capital of 20%. Is that even high? I don't even know what the
Yeah,
comparable base is.
it is. Yeah, anything above 15% is valid.
Price to book of 6. I mean, yeah, but I don't know what to look at.
Well,
$2
price
billion.
to book
dollars.
is not really an important metric.
I mean, this could be a good comparison to that, the Pilgrims or whatever. But again,
This is
right,
growth.
Pilgrims. Hmm?
Growth. I mean, this is honestly value at growth. This is not bad. I don't mind this.
Well, it's value growth. You're saying on a 30 PE? That's value growth?
Yeah, where you consider growth, and yeah,
Forward P of 30?
yeah.
We'll have to, yeah.
Price,
Why
if
is
you
this
notice
not
that
there?
it's coming down. It's coming down from 35 per 40. That's poor value at growth. kind of indicates.
Food company packages, markets, and cereal, shell, eggs, butter, and other products in the United States produces products sourced from animals raised on family farms. Such as eggs. This is eggs and egg products.
Yeah, but it's bougie. It's bougie. It's like
All right.
they're fancy eggs, you know.
No, I get that. I'm just thinking on the idea of looking into the company. It's like I'm not
Yeah, we
interested.
can
Are
add
you
it. We should add
interested?
it. Yeah, yeah, we should add it to the list. We should add it.
Okay. Okay.
I don't mind it.
VTL.
They're young. They're young and they kind of resonate with younger health conscious consumers, you know, like it's kind of like the future of like if you think about what most people go for, if the health craze continues,
Mm-hmm.
we're kind of moving towards these types of smaller companies that maybe are a little bit more expensive than traditional, but
Mm-hmm.
they market themselves as healthier. I mean, obviously, I don't know if they're healthier,
Okay.
but they tell us that they're healthier. You know what I mean?
Fair, fair. All right, Edgar, no problem. We'll see you soon. He has to go to some company-wide meeting.
Yeah, good.
Marsetti, what about Marsetti? Is this like international? They have good
Yeah, I
growth.
assume they make chocolates.
They make what? Oh, this is a food products, $5 billion. Let's see what they
I
do.
assume they make like chocolate or something.
By the sound of it. Wait, is this Lancaster? Lancaster Colony Corporation engages in the manufacturing and marketing of specialty food products. Is a type? Oh no, it is Marsetti. Okay. Your operates in 2 seconds. Retail and food service. The company offers frozen garlic bread. Okay. And their brand. I don't know if you know this. Brand
No,
bakery.
no, no, no. Yeah, we can get rid of it.
Yeah, all right. Yeah.
Looks like they license sauces. I'm not really.
And
I
then
don't really
you
care
said
for it.
you like Tootsie Roll or not anymore because of the price?
No, I just said that they had one of the best returns in the
Mm.
last 10 years, like
Price to
comparable to
book of
tech companies.
3. That's pretty low, but we don't. I don't really care
And
for that. Okay, okay. All right, so
I
then yeah,
think I think we
let's.
add Coca-Cola, Philip Morris, and Vital
Yeah.
Farms, and we can pretty much
Okay.
move
Now
on.
let's see the ones in between, because okay, so we're here. Ambev, Universal Corp. Universal Corp is in. Well, no,
Ambev
but
is
this is
beer.
Staples. Tobacco. Oh wait,
Ambev
this
is
is another
beer.
tobacco. Hey, Ambev is beer. Okay, got it. My bad.
Yeah.
Good growth. Well, I
Wait, I
hate
think
that this
it's
doesn't come out. Net profit 16% profit margin. I mean, I'm looking into this a little bit. Return invested capital. I mean, looks healthy. Annual dividend yield of 6%. Yeah, I like this. Low cash. Oh, well, this is per share, I guess. But yeah, price to book. Yeah, yeah. I'll look into this if you don't.
Yeah.
At least,
Add it
yeah.
to the Excel.
Fuck, I keep not checking the ticket. Abev.
Ambev. Ambev.
Abev. Yeah, let's get a bevy.
Yeah, I think it's
Are they
it might
from
be wrong
Liverpool?
actually.
That'll be funny if they're from Liverpool.
No, they're like German.
Yeah.
Yeah, they're Anheuser-Busch in
Oh.
Bev. It's a combination of two companies that happened a while ago.
Oh, they own Budweiser, Bud,
Yeah,
Garden. Yeah, I don't know the other ones. Presidente. Corona. Wait, what? Modelo.
uh,
I thought this was.
Stellar as well.
Wait, I thought these people weren't these people a different company? Like, I thought.
Constellation.
Yeah, that's what I thought. No?
Mm,
Interesting. What the hell?
it's something with the distribution rights.
Wait a second. What is? Do you know the ticker for Constellation Brands?
Yeah, STZ. STZ. STZZZ.
Oh,
Z.
Z.
Z like Z.
Like Zach.
Z like Z. Sac.
Yeah, so I guess they market different places, right? These people market to Brazil, Central America, Caribbean, Latin America, and Canada, and these people have the good market:
North
U.S., Canada,
America.
Mexico, New Zealand, Italy. Interesting,
Your mega consolation brands.
but they're basically the same beers, right? No, not exactly. Some of them.
No,
Interesting.
no, just Corona and Modelo, I think, are
Yeah,
the
the other
ones that
ones.
overlap.
Yeah, they have Michelob
Oh,
Ultra.
and well,
They have all the
yeah, whole
beers.
garden. Mhm.
Yeah, good, good. Yeah, I'm down to check this out for sure. And then, oh look, what the fuck? They also teas. Hmm,
Yeah, it's the same company, bro.
Red Bull.
Like, look at
Yeah,
the website.
headquartered in Brazil.
Yeah,
Okay. All right, we gotta move quicker. Let's see. Universal Corp. This is the tobacco one. Let me see if I'm interested.
their brands.
Plant-based against the food and beverage. Oh wait, business to business. Oh, these
Oh,
people they provide to the
oh,
makers.
yeah, it's like loose tobacco.
Mm-hmm.
Eh,
Procuring, processing, packing, storing, and shipping flu cured burley, darker cure. Yeah, so it's type like the leaves. Consumer products
yeah, but,
manufacturers.
but do they provide to the big ones, or are
Yeah,
they
let's
like
see.
what are they doing?
Let's do a quick search of the customers. What are the main customers of UV company? Ah, I gotta change the engine. Whatever. For a question like this, I guess it's not that important. Oh, look. Yeah, so they provide to Philip Morris. All right. Hmm.
Go
Top
down.
buyers.
Say what about Altria? Say what about Altria?
What about Altria? No, not the. Ugh, no, like if Altria is one of the customers, and how much the revenue they provide. So one of Universal Commerce the largest customers. So then why didn't you say at first 60%? Wait, these people. Why is this engine such a?
It's all their top customers combined.
But then why
It's
didn't you mention
60%
it
of the
at
revenue.
first? I guess it's one of these.
And it's probably not in that top five. Probably sixth.
I mean, it says 60% of the revenue. Oh, you're saying all their top customers. Okay, my bad.
Yeah, yeah,
I mean, could be interesting to see if they're at the upper part of the supply chain. But
yeah. Um,
what were the metrics on this,
not bad.
guys?
Remember though that
15p revenue
remember though that
growth.
client concentration is an issue for these types of companies.
Yeah, low profit margin. Dividend yield is good. That took a really low PV. Yeah, I'm down to check it out. I mean, it's like super small company, but that would be good, right, for us? Do
Yeah,
we want smaller companies?
yeah.
All right. Let's add to
More
this.
operating smaller companies. Oh. Excuse me.
Cough, cough. Coca-Cola. Ah, okay. Kimberly Clark. You know these people?
Yeah,
Or Colin?
I think they sell, like I think Kimberly Clark's does like oil drilling, no?
Let's see.
I was looking at that, why it's there. I'm pretty sure they're gas exploration, are they not? They own
No,
like a pipe.
personal care products.
Oh, I'm thinking about Kinder Morgan. Never mind.
Mm. Disposable diapers, training, youth pants, swim pants, baby wipes. So things for kids. Incontinence care. Oh, like diapers. It's just big with diapers and tissues. So like any paper related hygiene things. Huggies,
Tampons?
pull-ups, good nights, Kotex, Poise Depend, Kleenex, Scott. So they're provided to this company?
Tampons?
manufactures. Hmm?
Tampons?
Tampons? Are they in here? I don't think so. I mean, is there anything about feminine stuff? Feminine and incontinence care products. So yeah, tampons too.
What brand do you use?
I don't want to disclose it. I'm trying to get a
Uh,
partnership with them for sponsorship.
no free advertising.
Exactly. Try to get a good deal here. They're from Texas. Texas. I mean, I'm not interested in these people.
Pretty
Cro-
sexist of you.
I don't know, right? I mean, it's a good PE, but it's like nothing remarkable. EPS growth, I mean, this in the last year, pretty good. But then how is their revenue down? Revenue down 3% the last year, but their earnings are up 30%. Net profit margin 11, return on invested capital 23, and revenue. Yeah.
Earnings like
Oof.
that's not like yeah, that's not healthy.
Yeah.
Remember,
Bad
earnings
PE.
like can be manipulated by one-off things, right? So if like their revenue is down, it's like companies may have sold like parts of their business and stuff like that, and it's like
Also, price to
you never
book
really
is what is price to book is price to assets or price to equity? Because this would be like price to like
it's
maybe they have high debt or something.
price to equity.
Yeah, so that's
Yeah,
probably
I
why the
mean,
earnings are up. They just have
yeah,
total debt. Well, just steadily normal. Oh no. Well, right. Yeah, they have really low equity.
a
Okay.
billion in equity,
Yeah, fuck that. All right.
1.9 900 million in equity.
Milli vanilli. What about Kroger? These people are like a
Kroger's like a
competitor to
supermarket.
Costco and all these, right? I don't know.
Yeah, sort of. Yeah. It's not. There's like
Yeah.
a supermarket, really.
Okay. Okay. And what are the metrics? Growth that is mild. Again, growing earnings and lowering revenue.
Yeah, I'm not gonna lie, people like Kroger a lot, but they don't really have a big presence where I am, so I don't really know much about them
Wait,
in terms of like quality.
I skipped Calm Main, but it actually looks all right. Look at this. 60% revenue growth in last year with good growth in the past 5 and 3. Great growth in earnings. Good profit. Well, or normal, I suppose. Revenue invested capital 40%. Annual dividend yield 7, 6.5. Cash flow per share, I guess, but 22. That's high. I think it's the highest here. Well,
That's
behind
good.
case. Yeah, this is good. And then 2 PV.
Open
Yeah. What do they do?
open it
Calm
up.
Main. Eggs. Production, grading, packaging, marketing, and distribution of shell eggs and egg products. So these are other eggs, people.
And
Farmhouse
plan the
eggs.
lake. Yeah, this is the egg. This is the main egg company, it looks like.
Hmm. Yeah, this could be
This
interesting.
is kind of this is kind of like value trap territory because
Oh yeah.
egg prices are really high right now.
Right,
Why
but
did they raise
again,
their dividend?
yeah, but they have good
Nice.
growth.
This looks like a one-off situation.
Really? That is
Yeah,
0.
very good.
I don't know,
Yeah,
man.
maybe they're well run. I mean, you never know, but it's like I think right now eggs are expensive, and I don't know if that will last. Maybe it will. Maybe it will.
They are
It's
building
nothing to say that.
cash.
What's their market cap? You got to look at.
Hmm.
I don't. You're looking at numbers without knowing the market.
My bad, bro.
You
Let
gotta
me
go
see.
back to the main page.
5 billion.
Okay.
5 billion and they say 100, so it's like a fifth of their market cap in cash or so.
Okay, so actually, Vital Farms has to be very small. They have to be like sub 1 billion.
2 billion. Yeah, I mean, small.
Hmm.
And they're more expensive in terms of PE. We could
Yeah,
look at them
yeah,
as a
yeah.
comparison. I think if we added Biden, we should add these people too. What do you think?
Okay.
Yeah,
Yeah,
yeah.
yeah. I just like these eggs are the cheap eggs. They're the box standard eggs.
Right, but people want them by the
Yeah,
growth metrics.
everybody's into eggs. Everybody's into eggs right now.
I mean, it really is the best food. I just ate a boiled egg after my lunch. It's just fucking fire. Pepsi. I mean, I guess Pepsi we will include because we include Coke.
I like Pepsi more than Coke.
Right, so then
I mean,
definitely
you
we will
know,
have. I mean, I didn't
I
quite
know
know
this.
that, but why?
They're cheaper and they're diversified into more stuff.
Okay.
Um, Coke, their portfolio is all only drinks based.
Mm.
Pepsi owns like Quaker Oats and Doritos and a bunch of
Oh,
like
Doritos
pretty
is
well known
Pepsi?
consumer brands.
Oh, wow.
Yeah.
Okay.
And then they're cheaper than Coke
Yeah.
on a PE basis.
Mm-hmm.
The issue, the difference, and why people like Coke a lot is that Coke, one of their biggest hidden assets is that they control distribution.
Mm.
But Pepsi is doing that too. Like they were like kind of late to the If you think about like Coke started that whole thing,
Okay.
where it's like the hidden business behind their business is actually their distribution system.
Mm.
They started that. Pepsi has kind of copied it. Like for instance, Celsius uses Pepsi.
Oh,
Most
okay.
young brands, like these hot brands or whatever, that kind of like come into the space,
Crazy.
and what their strategy is like grow as fast as possible and then get an exit, like get a buyout or whatever.
Mm-hmm.
They partner with Pepsi and Coke for distribution.
Mm.
It's a great business. Like honestly, it's like a fantastic business because if you're Pepsi, right, like you're
Mm-hmm.
building pretty much a conglomerate of brands, and
Mm-hmm.
then if you have a distribution system, companies come to you to
Mm-hmm.
use you, right? So you make money off the company right from the very beginning, but then on top of that, it's kind of like if you imagine like growth by acquisition, like all your acquisitions come to you. So you have a very, if you're Pepsi, you have like a very detailed, like, how do I'm like kind of not using my words right. Essentially, like, you have a very intimate look at the business
Mm-hmm.
before you buy. Like, you know exactly, you're distributing the product, so you know exactly how real their growth is, like the interest of the product,
Mm.
all this kind of stuff before you buy. So it's like a very good business, really.
Okay. They are growing there. This is, I guess, what you meant with the
You know what I'm saying?
distribution.
Like a company like Celsius partners with Pepsi to distribute the stuff.
Yeah.
Pepsi then knows exactly how much stuff they're selling before like investors even know. You know what I'm saying?
Because of the partnership, you mean? Because they know their customers? Is that what you mean?
All of the products run through Pepsi's distribution. Like Pepsi knows exactly how much every supermarket, every like gym, everywhere that sells Celsius,
Mm-hmm.
Pepsi knows exactly how much of Celsius they're buying. You know what I'm saying?
Yeah, but I guess I thought you were saying that Pepsi had a less developed distribution network than Coca-Cola. You weren't saying
No,
that, or
no,
did I
they're just
misunderstand?
it's this at this point it's the same because these companies are old, but I'm just
Mm.
saying like Coke revolutionized that business model first.
Ah, okay. Because by controlling the
Coke did it first.
distribution network, they can know the demand trends before.
Exactly.
Okay.
Yeah.
Okay.
And it's just money as well. Like, they get paid money to distribute the products. Like the distribution chain is very valuable.
Hmm. Okay.
A lot of companies do it. Like Amazon, that's their whole thing, is that Amazon's like silently built one of the best distribution networks in history. You know what I mean? On the
Yeah.
back of like pretty much just selling the product. They're selling the product. Like I think Amazon distribution now does more
Hmm.
than federal distribution systems like FedEx or UPS or whatever it might be.
Hmm. I mean, they're buying stock, like 1 billion of stock every year. I don't know how much that means, but return on is just growing. Yeah, I mean, it's just healthy, growing business, but at good prices, under 20 P. Yeah, okay, we'll
Yep.
check it out for sure. Cisco. Do you know Cisco? Like not the company, not the office one. What's this? Cisco with
No,
an
I don't
S.
know. I think they're also distribution. I've seen Cisco trucks.
Yeah.
Yeah.
Distribution. Yeah, market and distribution of various foods in the US, Canada, United Kingdom, France. Yes, it just move the stuff around. All sorts of foods.
Yeah. But see, like with Pepsi, you get that plus
Plus the
a
products.
portfolio of, yeah, portfolio of consumer staple products.
Yeah, well, let's see what Morningstar says about me. If he lets me. Maybe you won't. The fuck? Oh, there we go. Cisco, the dense distribution network allows it to deliver perishable goods more quickly and cost effective, and this edge should help it continue to take market share. Recipe for growth strategy focused on the most important aspects of the business, customer experience, and supply chain. Relatively small bolt-on acquisition strengthens Cisco's ecosystem, and then the bears say lack of pricing power. Right, makes sense. And the switching cost is low, right? So they can just hire another distribution. Right, which is what you were
Yeah.
saying, right? If you own Pepsi, then you have that moat of the brands.
Yeah. Check
Coefficient
out
group purchase. Mm-hmm.
the competitors. I'm
Oh, yeah.
curious to see
Just
if
Compass.
Coke would be considered. I don't know. Okay.
They're saying the economic moat for these people is wide, though. Interesting. Is there a section for moat in the report? Or is it like
Yeah.
within? I can just do
No,
it.
well, it might be within, yeah, but they
Oh,
definitely
look.
talk about it.
Wide
Why they
moat
assigned
based
it.
on cost advantage. Okay. We assigned Cisco a wide economic moat rating based on cost advantage in its supply purchase and in logistics in U.S. operations, 70% of fiscal sales. Returns on invested capital, including goodwill, average 15%. As the pandemic drove away from home dining down sharply, returns fell to the mid to high single digits for fiscal 2020 and 2021. However, with restrictions removed and under Cisco's recipe for growth strategy, returns rebounds to 50%, 18%. We forecast returns to average about 19% over the next 5 years, and we persist over the next couple of decades, completely exceeding a roughly 8% estimate for firm's cost of capital. Even the largest restaurants can't match this purchasing power. Only the largest U.S. restaurant, wide moat McDonald's, is in the ballpark. We think its relative size, 55 billion in purchasing food and related goods. It buys from thousands of suppliers, none of which account for more than 10% of purchases. In turn, it aggregates demand from 730,000 customer locations to drive economies of scale to get better per unit cost from its highly fragmented suppliers. Even the largest, right? So they aggregate a lot of customers and they have fragmented base of suppliers, which give them more control over the prices. That's I see, yeah. Hasn't always leveraged its purchasing power scale, with each distribution center very independently in the past, but after consolidating purchases in the fiscal 2014, gross margin expanded nearly 200 basis points. By sales, Cisco is roughly 1/3 larger than Performance Food Group and more than double the size of US Foods. Okay. Cost advantage in purchasing suppliers. More material in the company supply chain. Okay, so it's just they have a good network and they're consolidating now. 50 and 90% more customers per delivery truck. Two incremental advantages. There's a scale across large customers. Okay, I feel like I don't want to get too deep into this, but what do you think?
You already did this, bro.
I don't know. So, but are we including it
I'm not.
or?
I'm not really interested.
Okay. Earnings has gone down also recently. All right. Yeah, I don't know. Mondelez. That sounds familiar. What do they do?
Candy, chocolates.
Ah,
They own Ferrero
Oreo,
Rocher, Oreo, and stuff like that. Yeah.
Ritz,
Actually, no,
Cadbury,
They don't own Ferrero Rocher, but yeah, all this kind of stuff.
Milka. Milka and Oreo. Ah, that's why all those collaborations. Toblerone.
Cadbury, Toblerone.
Toblerone. They're like the king
Yeah,
of duty free.
it's a a nice company. It's a nice company, but please close this window and move on.
Oh shit. So okay.
Again, like look at the P. Like the P is just too high, bro.
Is this too high?
Yeah.
All right.
For a steady business, like we
Yeah,
could find better stuff
it's
than this.
contracting
Not building a
earnings. All right, fair,
100
fair.
stock corp. You know what I mean?
Fair. No, no, no. Hershey's is the same thing, right? Yeah, same problem.
Yeah, it's
And
not worth it.
then Colgate, yeah, we're not interested in anything in between.
Uh, Everything up here is again like it's not. They're just too expensive.
Yeah, and the rest we checked out. Okay, so I think we're done with this sector. Vitamin.
Yeah. It's,
Okay. All right, so now we do the same screener but change the sector, basically.
we could, or we can do the same sector and change the screen and make it
Wider.
growth oriented.
Okay. So
Make
how
it
will we
growth
do that?
oriented. But we up the EPS growth and the revenue growth. Yeah, you have to reset the whole thing and start from the beginning. Like
Modify
you have the
criteria.
screen saved. No, no,
Yeah, it's
don't
saved.
modify
So
it.
I'm here. I'm in this. I can modify without
Oh,
saving, right?
yeah, okay. So
Or
price to
no?
earnings there should be fine.
Okay.
I don't know. I guess.
Let me see. If I do
I don't.
here,
I started one crash.
let's see. And then this is it. And then I do this. And then I go my save. And then I go here. Yeah, okay. It's not saving if we modify it. All right, good. Well, but now we have to go to it. All right, so we can modify. So let's see. We keep the PE. Revenue growth, we up it to what?
15.
15 the last 5, 15 the last 3 as well?
Yep.
And then anything for the year?
Yeah. Like all of the ones above 15, like 15, 25, 50, and 100.
Okay.
Yep. EPS
E-
growth. I mean, we could raise it, but like it's if we're looking for companies that might not be, we should take
right.
it off. Yeah.
Take off EPS
Yeah.
growth completely.
Yep. Because it might be negative, you know.
Got it. Net profit
We're not
margin.
investing.
We don't need a profit margin then either, right?
No. Nope.
Nope. Return
We're not
invested
investing
capital.
capital. Yep. 10%. Yeah.
Damn, we're really ending
Cash
up
flow
with
per share.
4.
Cash flow per share, get rid of it. That, yeah, we don't have anything marked for that. We don't have anything marked. No debt or less than 1.
All right.
Yeah,
3
and then this
companies.
doesn't matter. Yeah, let's see
Well,
what we
one
got.
company really because of the market cap, I guess.
Let's see
All
what we
right.
have.
Let's see what company it is.
Yeah,
Vital Farms. All right, we already
yeah,
have them.
there you go. The growth.
The growth at value. Yeah.
There you go.
All right.
All right.
So then,
We can move on to the next industry.
okay, so we go back to this screener and now we change.
Unless if you want to change it, we can change it to the stuff that you want. You think could be good.
I mean, I don't know what that would be. Like what? Like maybe like we do now the other side, like value. Ugh,
No, we just did value.
that wasn't value. I'm talking
It
like
was value.
no growth. Why would we want that
How
though?
is that value, bro? That's not
Just
no growth. It's value.
cheap. I'm just looking cheap. I'm just looking cheap company.
What a crazy thing to say. Oh yeah, this thing is dying. Yeah, this is good. This is
No, but
value.
not dying. It's not growing. You know. But yeah, if you're not growing, you're dying. Right?
Be worth something more.
Okay. So then, yeah, I mean, I don't know what else. Then you're saying check something that I would be. I don't think there's anything I can
I'm saying
modify
the
here.
first one, Yeah, the first one we did was value, essentially when you sort by price, so like price to earnings, it's essentially just giving you like what's
Right.
cheaper in that mix. Like we did healthy, we did pretty much it needs to be at least healthy, and then we sorted by value. So it's like we stuff that was pretty cheap, and then we can look
Mm-hmm.
into it basically figure out why it's cheap, and then if there's really no reason that it's that
Yeah.
cheap, we
Mm-hmm.
can buy it. And we kind of did that, so we did good
So
value.
yeah. So let's just change the sector then. Consumer, let's see. Discretionary, or we go into a different thing? Yeah, it's the discretionary. Let's
Whatever
see.
you want. Why don't
60
we start from the
matches.
top?
Do we wanna maybe make it a little
Yeah,
bit
we
more
could
narrow?
the
Just
yeah, we could change the stuff. Yeah.
ooh, look at this O'Reilly Automotive at 2 PE. Damn, wait, but actually they're doing all right.
No, yeah,
Why
this
the hell?
I know this company. It's not bad.
Good, and they have cash flow.
Yeah, I think Buffett owns this, maybe, if I remember correctly.
Who owns this?
It's like, I think it's used cars, right?
Retail and supply of automotive aftermarket parts. No, tools, supplies,
Yeah, or
equipment.
in the yeah.
They sell parts. Okay, good.
It's an interesting company in this space that this guy that I follow on Twitter, like, he loves this company. And I've never really understood what it was, but
I
yeah,
mean, it's like, but there's a huge like shop. I mean, not that shop, but like these people like it, but Morningstar doesn't like it at all. Should be able
yeah,
to
they
leverage
just
the distribution of further growth.
they have a wide moat, but you probably
Yeah,
just think
wide
it's
mouth.
overvalued.
Yeah, for sure they do. But how is it overvalued at 2 PE? Best to fair value of 1.45. They like advanced
It's not
auto
really.
parts better with no mode. What the hell?
Yeah,
Wait,
it's just
no,
cheaper.
as in no qualification to the
Star,
mode.
the star rating is based on the fair value.
Yeah, but why such a low fair value?
Well, the PE is probably misleading. If you look at the
Yeah.
cash flow, it'll probably tell you a better story.
All right, let's check it out. Where's the market cap for these people? 77. Oh yeah, we already saw that in the morning star. And we were looking at their. Why did I open this statement to check their cash flow or something like that?
Come, well, the chicken company.
Total cash from operations of 3 billion, steady at 3 billion, or kind of contracting. Cash from investing is down for some reason.
Cash from investing is not important, bro. Their
Okay.
capex.
Oh, it's the
It's their
capex. I see.
cash minus their capex. They're doing like 2 billion in free cash flow. Go up?
Hmm?
Moving weird. Go up? Go up? Go up? Yeah, they're doing like 2 billion in cash flow per year. Go to their like
Go where?
go to the top. Go
I'm
to the
at.
top and go quarterly.
Oh,
Left. Yeah. Oh, it's only been one quarter. Okay. Yeah. I mean, check now their income statement. Their income statement should be way more than 2 billion theoretically.
no.
Net income after taxes, huh? So you're telling me that this company trades for what, $1 billion? Go to their market cap?
77 billion is the market cap.
Huh?
77 billion is the market cap.
77 billion?
Then how's the PE too?
It's not 77 billion.
Bro, it said that.
What?
Yeah, there's something weird then. Is that what you were saying? The PE is misleading.
Something is wrong, yeah.
Yeah, what, what the
Bro, the
hell?
PE is like 150, bro. What are we talking about?
Yeah,
This
I'm confused.
is
Now it will make
150
sense why
times.
they're not fairly valued or whatever, but how did they calculate that?
times, bro. 150 times
Yeah, chill out.
price to earnings. 150 times.
I don't get it.
What does it mean you say on this page? Go up.
Two. Share price
No,
is
no, yeah.
diluted
Go up.
earnings per share. What?
Go up. Right here.
EPS
Where?
of 40.
Oh yeah, there you go.
But
No, forward 30. But PE too. Oh,
what the fuck?
go back to their statements.
Ah, look, net
Oh,
income here shows up at 2 billion.
okay. That would mean that it's at fucking 35, bro. Doesn't make any sense.
Oh, maybe it's because we were looking at quarterly. Ah, it's because we were looking at quarterly. It was 500 million. Ah, okay. So
So,
annual 2 billion.
dude,
Okay.
yep, still, yeah, still,
What?
it's still
77?
35. Yeah,
Yeah,
it's
it's
still
not 2, that's for
35.
sure. Yeah, right. It's not 2.
Yeah, put down more.
Yeah, look. What is this? Yeah. Because the weighted average shares is lower.
So
Like
what,
that,
bro?
like that's why the PE is high. But it wouldn't, yeah, what the fuck would it matter if the market cap is
Oh,
77 billion?
it's two, bro. That doesn't make any sense.
Where
Nah, it's a
this
mistake on. It has to be a mistake on Schwab's
Well,
UI.
no, look, what is happening is like they're looking at the price per share of 90 divided by an EPS of 40. I just don't get what the hell is going off here. If this 58 shares times 90 wouldn't give to 77 billion. Hmm?
No, it's just a mistake.
Okay, we just pass it as a mistake.
Ask ChatGPT.
What do I ask? Like, what
Is
is
it
the.
why is O'Reilly's P 2?
Fuck, I just check and then I don't press and raise them. Okay.
Orly,
Okay, let's see.
Orly,
How about what is the PE of. Fuck.
Orly. Oh my
Yeah,
God,
my bad, bro.
triggering.
Ah, there we go. Yeah, so it was a typo. It's 30.
Yeah,
Okay, so
it's
yeah, we're not interested.
straight up a mistake. It's straight up a mistake.
Alright, fuck that.
Somebody getting fired. All
Uh,
right, change the screener.
change it? What do you want to change?
Yeah, we gotta start fresh.
What do you mean fresh?
Fresh.
We're good here. If
Start
this is the
fresh.
criteria we want, we just change the sector. No?
What sector is this?
This consumer discretionary.
Okay.
China automotive. I mean,
Nah, bro.
M&A or
We're good.
MI. MI
We're
homes.
good.
Where is like real estate developers on? Household durables. Like Home Depot.
No, Home Depot is a retailer.
Ah,
These guys are well, maybe it kind of is similar.
construction and sale of single family. No, they sell homes, people.
Yeah, the home builders.
Design, constructs, markets, and sells single, yeah, single family
These are
townhomes.
important companies, but I never really understood why. I think they're trailing indicators of recessions.
Okay.
The CNBC loves to talk about the home builders. No, I really don't know why. The biggest one in the space is KB Home.
KB Home, here it is. They're about the
Yeah, they
same.
use it as like they use the home builders as like It's like what's that term that they use? Canary in the coal mine or whatever
Yeah, yeah, like to just, yeah, it's an indicator, right? People are not buying homes, right?
type of thing. Yeah.
Revenue is like, yeah, growing steadily. Income growing too. No, cash flow. Oh boy, the fuck is this?
I think this is the highlights. This is not useful. You need the expanded version.
Okay.
Green brick. I don't like it.
Okay. Yeah, I don't really know what to think of this. We'll just leave it. Giga Cloud. Crazy growth.
Yeah, this shows up on a lot of my screeners, but I've never really looked into it.
What are they doing? Like cloud
There's
computing?
over Crocs. I have a nice write up on Crocs. People love Crocs, like all the value investors love Crocs, bro.
Alright, we'll check it out. Large parcel merchandise. Payments, logistic tools. What is this, man?
I really don't know.
Yeah, what the fuck are they doing? End-to-end B2B e-commerce. So they're like a payment provider for B2B. Giga Cloud is such a
Uh,
fucking terrible name.
it's a tech. It's a tech company. I don't really know.
Yeah.
It looks good though. The numbers look like pretty good.
Yeah, cash is building up too.
Show me the
Well,
market cap.
yeah.
It's
Uh,
small. It's got to be really small, right? Couple billion, maybe even less.
yeah, not even a billion.
Not even a billion. Yeah, this could be something. I'm telling you, it shows up on a lot of my screeners. I just don't know. Uh, yeah, let's look
Yeah,
at the numbers. Open the statements. Like, just show more. Yeah.
yeah, I got you. Cash and revenue. Yeah, revenue
Yeah.
growth,
They're
expense growing too.
profitable on an operating basis. Yeah, this looks great, bro. Look at the current year.
Interesting.
Like the two
Quarterly?
quarterly.
Yeah.
Yeah. This is like what, 7 times income. A lot
Mm-hmm.
less even. They're on track to do wait. Yeah, they're still growing. They're getting yeah, they're oh my god.
Wow.
Yeah, very bad.
That's good. What is it? Net income, and then they're adding other non-cash item. Payable accrued. Wait, so if we discount that, because that they're gonna have to pay this back. Deferred taxes. Yeah, they're gonna have a bit of accounting trickery here. Capital expenditures of 15 all of a sudden. Repurchase of stock. Continue to increase cash, no taxes paid. Pay the taxes, which is probably what, yeah. Deferred taxes here. They're paying ahead. Hmm. What would be their inventory? I'm confused. Let's see. What do they do? What does company GCT do? What? Ah,
I'm back, by the way.
oh, this is not global container terminals. No, man. I mean, no, this is not Google Cloud. No. Wrong company. I'm talking about Google Cloud. Johnny driven B2B. Oh, did I write GC? It was GCT. I write GTC. No, GCT. Whatever. Technology driven B2B e-commerce channels, especially in sourcing, logistics, warehousing, fulfillment of bulky parcel merchandise. Asian manufacturers with global resellers. End-to-end freight, warehousing, and delivery. And this would be good if China, depending on China's production and then these companies buying. Which I guess with tariffs, they're probably gonna get affected, or they are affected. Purchase inventory and sales directly. So that's why I was wondering why their inventory is up. Because their inventory continues to grow. So I guess they are buying the products. But yeah, so this, because I'm like, also if we check cash flow, they have here this last 2 years the capital expenditure, especially this last year. But then I was wondering what the hell they bought. But I guess it's this machinery and equipment, property and plant. Accounts payable and up too, but so again, these are such small numbers. Taxes payable. They owe taxes. Yeah, but the total debt is down.
Hold on, let me 1 second, bro.
Yeah, no problem. Equity up, right, because debt is going down. Like current liabilities is up, but it's like current liabilities is taxes payable, really. And, well, this other current liabilities. Yeah, I mean, they're just buying the inventory and owing the money for it. Right, accounts payable. But they also have cash. So they can handle. So yeah, it's just like the way they're conducting business and like they're at risk. Cost of revenue, right, it's just in line. Advertising going up though. So yeah, they're trying to grow. R&D. And usually expense of 3 million. Hmm. I mean, it's interesting enough to look into. Depreciation up again, too, probably because of the new property and equipment. But then if it's no, just from the other one. 1P inventory sales. What purchase inventory? Most of the revenue, or like, yeah, most of the revenues. Dependent sellers list goods with Moldova handles logistics. Off-platform sales through third-party channels. Niche focus specializes in large parts of B2B. Tech Edge uses AI and machine learning for inventory logistics optimization. It's so fucking hot in here. Twenty-one warehouses, 14 individuals. How many of
Alright.
them are new?
Oh my god, bro.
How many
What are you doing, by
are
the way?
there? What?
What are you doing?
Going too deep again.
Yeah, you
But
can't
I
be
like
left
it
your own
enough to
devices.
check it out. But yeah, okay. Last question.
It's definitely interesting, but we need to go faster.
Okay. So yeah, I'll add it. I'll add it. I'll move on.
Yeah, just add it. We can look at it later.
Okay.
Why does your stream keep pausing?
It does? I mean, I don't know. On my end,
Yeah.
it's doing fine. I haven't dropped a single frame. So it's like I'm streaming it
No,
well.
you're the Discord stream.
Oh, well, still, I don't know why they would do that. My internet's supposed to be good. I'm
No,
on
it's not
Ethernet, so.
lagging. It's like it says like paused, like stream is paused, you know?
Ah,
Yeah, it's
well.
not lagging or anything.
Oh,
Like,
maybe I'm sharing. Maybe I'm sharing the window. Let's see.
oh yeah,
Yeah.
dude,
Ah,
yeah,
yeah,
that's
that's
what
what
it
it
is.
was. Okay, now I'm sharing the screen. Yeah. Okay. So now if I do this, right when it pauses, because I was changing to this screen. Okay, now we're good.
Uh, now I see it. Nice.
Yeah. Okay. Um.
Nice.
Crocs, right? Crocs we just include it right away, right? Shows up on the screen as you're saying they're growing. They have good invested capital.
Yeah, I did a
Uh,
write-up on it,
oh
and
yeah.
it's kind of like I did kind of come to the conclusion that it is possibly a value trap.
Why?
It's
They're
something along the
growing.
lines of like, well, here, okay, so here's the thing, like they were growing. It's like imagine if
Oh, I
a
see.
company that sells clogs, they sell shoes, they
Mm-hmm.
benefit off this massive wave of like pop culture, right?
Right. Hmm.
So revenue explodes,
Yeah.
and then now all of the metrics look fantastic. The issue is that it's like if you look at like the revenue moving forward, like if you look at the quarterly,
Hmm.
it kind of looks like now it's decelerating. Like you see
Yeah.
like how there
Yeah.
was a
Yes.
massive jump. Yeah. So like they benefited wildly from pop culture. Like everybody like Crocs became cool for a while,
Yeah.
you know? Like
Hmm.
really cool. Like everybody was into Crocs.
Yeah.
And obviously that really helped them. And then now everything looked like their metrics look fantastic because they have great earnings for their price and all this kind of stuff. But it's like every quarter from here on will be very like comps like you know what I mean? Comps are
Yeah. I
gonna be
know what
very
you mean.
different.
I mean, it's the first quarter they're down, right? Year over year. I mean, maybe it's not the first, but they are down year over year.
Yeah, the stock like crashed 25% or something off the latest earnings
Hmm. I mean, I think it
because
would
of
be
that.
good to look into because of that. Because, but to say, I mean, I just don't like the product, but I don't know. Like, that's not, I'm not a representative of the
Their
general
main
demand.
the whole thing is that their main product is good. It's just that they don't really so they're trying to diversify and like expand kind of their offering,
Mm-hmm.
but it's not really working. Like they purchased a company called Hey Dudes. Um,
Mm.
think in 2020 or 2019 as kind of like the first step towards diversification of their offerings. And Hey Dudes is kind of like it's not doing great. So it's like they're having a hard time going away from clogs. Yeah, that's yeah.
Mm.
Bought Hey Dudes for 700 million.
More probably if this is the
Um,
goodwill.
no, that's the first look at Google before that. One
No,
million.
but I'm saying if the goodwill is 700, then they paid more for it. I mean, how
See how much
much
they paid for
did
it.
Rocks?
I think they paid less for it, didn't they? I'm pretty
Good
sure they
dudes,
paid.
you said?
I think it's Hey Dude.
Hey, dude. No, goodwill is the amount of money they paid above. Yeah, the amount of money they paid above the value of the assets the company they bought. So it should
Oh,
be
so you're saying they paid more? Probably maybe they paid 1 billion or something.
2 billion in cash for no 2.5 recent really because they paid in shares.
Yeah, that's insane. That's insane, bro.
How is the purchase playing out so far?
Not great.
Sales fell 15-17%. Worse than expected, a 10 decline. Stock emphasis on performance triggered a sharp 19% drop in share price. Over inventory and
Yep.
pipeline fill. Yeah. Class action lawsuit. Misrepresenting Hey Dude's channel inventory sign. Well, that's just, yeah, this shareholder's getting pissed. Return to flat revenue growth. Despite wholesale channel weakness, Hey Dude's direct to consumer strength is encouraging. Both brand drove record earnings and cash flow.
Revenue there.
Yeah, but revenue is
And that's
flat.
therein lies the issue. Sure.
That's the issue.
Read mine. Read my tweet. It's better than these guys. At least I'm
Okay.
like picking sure. She doesn't know what you're saying, bro. Wow, no discoverability. Yeah.
Yeah, what the hell? I even follow you, why don't you?
This is the second one.
Oh, it was. I
I
didn't
hear
see it.
home problem. Let's open this.
You sent something in Discord?
Open this. Open this. No, open this. Show more replies thing on this tweet right here in front of you. Show more replies. Open that. And then scroll down and it should be here.
It's not. This is just Uber, bro. I think I opened the wrong one.
Oh, yeah. You opened the Uber one. My bad. That one, yeah. No, fuck, not that one either.
No.
This is a great write-up, though. Highly recommend. So go down. Go like past it. Did I really tweet this much? Oh, wait, go. You passed it. This right here. This right here.
This?
Oh, okay. No, I'll find it and send it to you.
No, I think it's here, yeah. Yeah, there we go. Crux. Value investors,
Another
darling, and
nine.
maybe for good reason. The stock at the current moment in time is incredibly cheap. This was written in December of last year. And away from favorability in pop culture, will that trend last? And how would the faltering of said trend ultimately affect? Let's try and find out. If we look at Crux sales over the last few years, there has been a big jump from 2020 to 2021, with the company almost doubling its revenue. And even since then, it seems like they've been growing at a decent clip, indicating strong demand. Very well capitalizes growth in sales by doubling the free cash flow. Even since the free cash flow growth has been commensurate with the growth in sales, how did all this play out for the stock? Well, between the lows of 2020 and 2021, yeah, return 1,500%. A lot of
Yeah, it's crazy.
outperformance seemed to be the fact that investors caught on to emerging trend. Yeah, I mean, it seems like this whole company is just dependent on whether people continue to buy Crocs. I mean, that makes sense.
Yeah. No, I'm saying like so essentially the PE, like
Yeah.
the way that the valuation metrics look are just based on the fact that like revenue exploded.
Hmm.
But from here on out, it's not going to be that way. Is what I'm pretty much getting at here.
But we don't know that, I guess.
Well, we know that.
Okay.
It's just impossible. Like they sell footwear, you know what I'm saying? Like it's not,
Right, but I
how
mean,
many crops?
let's see. I want to check
The
like
only
if
thing
their
that would give you
margins
kind
are.
of hope, the only thing that would give you hope kind of is to say like, oh, maybe they're gonna release more products that then would like,
Yeah, I guess yeah, the margin is not like expanding. Oh wait, I'm looking the other backwards. It was, yeah, yeah, it's like yeah, I don't know. Yeah, uh,
they sell clogs, you know?
yeah, yeah.
They don't
So
make software. So it's like
all right. Well, I mean, we are looking
the
at
growth,
consumer discretionary.
the
All right.
oh, there's
Well then,
growth in consumer discretionary. Like Amazon is considered consumer discretionary.
is it
Yeah.
okay?
I
Well,
don't know
we're
why. I
not
mean, they are
including them then.
they're Amazon.
Toyota?
Yeah, I don't like investing in companies.
You don't like
But
investing
if
in
I
car?
were to invest in a car company, it would be Toyota.
Oh, okay. All right.
But it's just like their margins are like razor thin.
Hmm. Then we have here Green Brick, which I think is a competitor to MI. They make houses
Yeah,
as
we
well,
saw that before. Yeah,
but they're growing.
Grim Brick.
Fucking hell. What's this? Cash flow per share. Market cap of what? Like 3 billion. Hmm. Yeah, I just don't know enough. Largest home builder in Texas, basically. We're in Dallas for Texas, Georgia, and Florida. Like very localized people. I don't know, bro. I mean, they seem good. They don't have any cash? What do you mean? Oh, okay. I don't know, bro. I don't know what to do. I mean, I guess not. I mean, it's none of this. I
But
don't know enough. I mean, Abercrombie is growing. I'm just recognizing names
yeah,
but doing the
they're
rest.
Abercrombie is kind of in the same boat of Crocs.
Hmm.
All of these companies just ride waves of pop culture favorability. Basically, they come back and then they
Should
it's
we
like a
just forget the whole
five to 10 years.
sector then?
Yeah, we don't have to look at any of this stuff really. I mean, if
I
you don't
just,
like, the whole thing is like if you don't like these,
I
bother.
just, I just. It's not that I don't like it. I don't know how to analyze like what you're saying. Depends on consumer trends. So yeah, I guess.
Yeah, it's tough.
All right.
Ulta, if you
Okay.
look at like my the ones that I like, Elf
Yeah.
is there, and Elf is kind of like an Ulta competitor. They make makeup.
Mm-hmm. Okay.
It's not a bad company, and it's like these companies get interesting pretty much to me. I mean, at least to me, like is like when
Yeah.
they're just really like cheap, like dumped down.
Right, but in the really cheap category, we're not really seeing anything interesting. We're not gonna get into real estate development. We look at well, we included GigaCloud, so I guess that's that. Crocs is the one that it's really cheap. That's why it's like even if we don't know
That,
what's gonna happen with it,
Nah, yeah, we
It's
know that 6 PE is just gonna keep expanding. I think
let's see.
it's either gonna keep expanding, which means it's not good for the stock price, or it's gonna keep getting cheaper, which is also not good for the stock price, you know what I mean?
Yeah, I guess. Do they give the forward
Sort of like
ratios here?
a sort of like a cold situation.
Price to earnings
Like
growth
cheaper gets cheaper
3.
and cheaper and cheaper. It's not good. 3 is not good.
Oh, okay.
You want less than 1
Mm,
or
PBH.
like close to 1.
Alright, okay. So then, yeah, let's just move on from the sector then. We grabbed one, and that's enough.
Well, we could do a growth one
Okay, what would
in
that be
this
again?
sector.
Let's see.
Like Lululemon also, good company, you know. But
Alright,
again,
so
it's like
then,
the same kind of thing.
what were we then? 15, 15.
Yep.
EPS, we don't care about EPS in this case. Well, instead of,
Uh, we kind of do for these ones. I mean, we
yeah,
don't really. It doesn't
I
matter.
shouldn't delete it anyway. Right, let's see. I'm doing a lot of weird shit. So, okay, so
Whoa,
15, 15. And then we do care about EPS growth. I just leave it blank.
we'll leave it blank.
Well,
Well, that's not blank.
yeah, that's not blank. Yeah. How do I?
Just get rid of it, bro.
Okay. Okay. And then, yeah, we'll leave this blank. Net profit margin. No, yeah, take that off.
No, get rid of it.
And return on capital.
10%, 10%.
Cash flow per share.
Get rid of it. No debt or less than 1.
And that's it.
No, it doesn't matter.
Four companies. All right, let's see. Ator, Deckers, Giga Cloud, nice. And PD.
Pinduoduo. Yep, I own that.
All right, let's add it then. I think we
It's
might have already.
Chinese.
Yeah, so.
It's on, it's on my list.
Oh, it is? Oh, it is. There it is. Also, wait. Also, I'm confused. Yeah, one second.
I'm confused by the fact that you like going left to right instead of up and down.
Just easy to see on the screen, bro.
Is it?
Yeah,
Yeah, beast. GCT is consumer discretionary
that's why I'm moving it.
value.
Yeah, there we go. I guess I'll put PD
Consumer
there.
discretionary growth.
All right,
Well,
so
they're kind of both. Pinduoduo, by the way, is so cheap. Like,
let's let's
so
see.
cheap.
This crazy revenue growth.
Nah, like, this doesn't even tell you the full picture. Like, it's their
Yeah.
growth that they have. I mean, the problem is that, like, so I haven't, like, Pinduoduo is like the company that owns Temu,
Uh huh.
but where they started, I think I've told you this before. Basically, they were like a farmer, like they were like a Amazon in China,
Mm-hmm.
and then they just expanded so rapidly to the point now where they're bigger than Alibaba's B2C, B2B, and P2P retail in China, and it's been like it happened in like less than 5 years.
Hmm. That's
Pretty
good.
impressive company. There's a kid, there's a guy on Twitter that got really in like a $800,000 portfolio, and he went all in with margin on Pinduoduo. He got clapped during this like market turn down, got really scared,
Uh huh.
sold everything, thinking that it was like the worst of the. It was like right in the beginning of the Trump administration. He like sold everything, thinking that like, oh, like it's gonna only get worse from here. No, no, no. This is worse than that.
Oh,
What you're
like
looking at right
here.
now is like the original China fears. Yeah, it was like one of those small dips like over there, right? In line,
Right.
it's like when Trump got elected and the markets fell or whatever.
Yeah, yeah. I mean, it is a
And
big
so,
dip. It's just like a short dip now in retrospect. But yeah,
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 yeah, he
yeah.
sold at the bottom of that dip, and now he's basically like a doomer. Like he went from like being full bull on PDD to like,
Hmm.
oh, everything is worthless. Like there's a crash coming, and everybody just trolls him pretty much.
Hmm. Yeah, I mean, we have it. We included it. All right, let's keep going.
Yeah,
Let's
it's
see.
great. It's
Uh,
great.
Do you know these people at Tor?
No, I don't know what this is.
Lifestyle brands. People in China. Hotel offerings.
Mm.
What the hell?
Ew, ew,
Hotel management
ew,
set. Day-to-day management
ew,
for
bro.
hotels. What the fuck is this, bro?
Get this out of here, bro.
Right away. Okay. Okay.
This
And
makes
then
me feel
Deckers.
gross.
Deck. Food. Oh,
Nah, that
okay.
actually made me give me like goosebumps. Looking at that
Wow.
company. Because it's like what like oh my god like a Chinese like was like a Chinese social media company like
No, it was like hotel management. What are you talking about social media?
they're like no but they're like brand it's like branding and stuff it's like a
Yeah.
marketing it's like a Chinese marketing company.
Okay, okay. I don't know.
Oh, I got goosebumps, bro.
Shoes. These people. Deckers. I mean, where does this sound familiar?
Hoka brand. They
Oh,
own
Hoka.
Uggs.
Oh. Okay.
Yeah, that's where the growth. This is where the growth is coming from.
Kula Burba.
Is Hoka. Hoka's so. What is that, bro?
Yeah, I don't know.
I
Kula
didn't
Burba.
know. You tell me Deckers owns Hoka?
That's what it says
Dude,
here.
Hoka is popping right now. Like genuinely, like, it's so
Yeah.
huge right now.
Oh, I see. I
Check
mean,
their metrics.
it's a huge drop
No, wait,
here.
wait,
But
wait.
they missed earnings or
What's the
something?
company worth?
No, they beat earnings. What is it worth? Like the market cap?
Yeah, it
16
says it
billion.
on that other screen.
It does. I never see it. That's why I always go back where.
Just scroll down, scroll down, scroll down. Right there on the right. Oh, go up,
Oh,
right
oh,
there on the
thank you.
right.
All right. Right. I don't get
All
why it
right,
went
go
down
there.
like crazy. Okay. Let's ask.
You can look at it.
Yeah. Why did that?
VECK. Please don't go back to the thing. I would have logged off, bro.
Not today. Yeah. Slowing growth and weak outlook. Guidance withdrawn. Oh, they withdrew guidance. This for Spook when Deckers provided no fiscal 2026 citing macroeconomic uncertainty. Escalating tariff concerns. Rare and uneasy move
Mm.
for the company.
Even Hoka is
Coca
decelerating.
uh, slowed
Sharply.
sharply.
Huh.
Direct to consumer weaker. China reliance.
I
70% of products sourced from China. Right. Potential margin
mean,
hits.
this is not really necessarily bad. What do the numbers look like for this year? Like, go to their income statement. Or show more.
I mean, it's still growing revenue.
Okay.
I mean, do you want to look at the
Then
quarters?
Yeah, so because this is like the growth that we see here, this is like why they
Ah, lovely.
now
Yeah, that's
it's still growing. Just like not as much from what it seems like. This next
it.
quarter, it looks like it's going to be pivotal for them.
Right.
Everything
So it's like
revising next
margins
quarter.
contract.
Their income, yeah, it's not bad.
Yeah, this is what you're saying. We'll see with the quarters. I mean, the biggest quarter for them seems to be quarter three anyway. So until the end of the
Yeah.
year. And yeah, makes sense, right? After like Christmas and all that.
Oh, wait, hold on. Go back.
Yeah.
Oh, wait, we have a full 20. Yeah, okay, so go back to annual. We have the full 2025. We're done. Yeah, we have everything. This is everything. So
That looks good.
actually, they're better announced Q1 of 26.
Wait, say it again.
Their next quarter is Q1 26.
Yeah, right. Yeah. And it will be
Yeah, so we
reported
have
in June. Wait. Oh, it's about to be reported. It ended in June 30, so
yeah,
it's
like right.
already. When is it?
Yeah. I mean, we're heading into earnings season.
When is their next earnings? Oh,
July 17th.
July 24th, but yeah. All right, well, we'll see. I guess
Okay.
let's put it in. Yeah, just to monitor it. All right,
Yeah,
so
because where are they getting this Coca demand thing? I mean,
hmm,
you know what I'm saying? Like, where's that? Where's ChatGPT? Because
you
they're
can check.
growing their revenue. I don't think I
Yeah,
don't think any of their traditional brands are. What are you trying to get? Oh, you're gonna look at the transcript.
yeah, quick search.
Yep. I like this. I never do this. I feel like I should do this more often.
Yeah, this was big when I was like this. What we did a lot of when I was at the bank, just checking the calls. I mean, obviously being on the calls and stuff. But yeah. I mean, it's crazy that all these transcripts are here for free. Um, Approximately 1 point, teams focused on total company growing a compounded annual revenue, having approximately 1.9 billion revenue, 1 billion revenue. Disciplined approach has yielded to industry-leading brands. Same products. Starting with Hoka, our fastest growing brand. Grow revenue in fiscal increased 24%. Yeah, I mean, I don't know what the ChatGPT thing.
Well, the revenues. They're saying that growth
Robust.
slowed, so I'm assuming Hoka's revenue growth was like in the hundreds. I'd
Right,
assume.
no, it's not. I mean, let's see if they ask something about it.
It's becoming a mature brand kind of sort of thing. I mean, it's still growing obviously, but like now everybody like kind of knows about.
Awareness has increased to an average 30% from 20%, leading global brand, opening Hoka retail stores in influential locations. Just a few weeks ago, I was able to attend the grand opening of our new Hoka flagship store in Shanghai. First of its kind flagship. Hoka Experience Center features high tech. Yeah, definitely focusing big on Hoka.
Yeah, I bought my mom some Hoka shoes for her
Hokas are like
birthday.
New Balances, right? Like they're like good, like walking shoes or something like that, or no?
They're apparently they're like the best.
Mm.
These ones, and then there's a few new companies on
Like
one
Q, what is that?
Coca.
QU or something like that? Finance people love those ones. You know what I'm talking about?
Yeah, I know about Hoka, On One, and Brooks.
On one is the one that I'm talking about. I always think it's a Q. Yeah.
Yeah, On One, and then Brooks. But Brooks
Mm.
is like super high end, I think.
Yeah, I think Hoka is like a lot of nurses buy it and stuff, right? Because they're really good to stand
Yeah.
on. Yeah,
Yeah, that's why my mom wanted them because they have like a lot of cushioning.
nice. Successful to do Hoka. I want to see the questions though. Hoka. Continue to be our fastest growing brand.
I would have never guessed that Deckers owns Hoka.
Stefano Correa, thank you, Steve. Oh, but this is the finance guy. All right, let's see. I want to ask about the slowdown. Oh, there we go. Steve, I know you mentioned several factors contribute. I don't know if you can give a little more context to the magnitude of those impacts, and maybe just a broader question what gives confidence that you know there's not a broader change in competitive dynamics in the trail and road category, especially if you're still working to establish lifestyle and fitness. I think, as I said during remarks, it was isolated in terms of some of the pressure that we saw in US and DTC in the US. When you look at it in terms of dollars, well, it's not huge dollars, but it is impacting the percentages. I think when we look at international business, did incredibly well. I think we knew there would be some pressure on direct to consumers, so not entirely surprised by the performance. Generally, where the quarter game is where we expect how to come in. So I'm not too surprised. They're very encouraged by the international business. They're very encouraged by the wholesale. Yeah, this looks like it's just maybe a little bit of a one-time thing. Once we get beyond Q1 with the success that we're seeing with the new introductions in Hoka, we encourage you're going to start to see those numbers improve. Q4 was our biggest quarter ever for Hoka. We grew 425 million year over year.
Yeah, because
And
they're
what?
still growing, right? I think it's just a matter of like it was a high flying thing, and then now the revenue flowing up questions.
Yeah.
But again, like 1/4 of good growth from here on out. This is like the opposite of, it's like comps now are easier actually
Yeah,
for
this is like the opposite of a
them.
value trap, right? It's like people have oversold
Exactly.
it on like a slightly
Yeah.
slower thing. That could be a one-time thing. Yeah, I mean, the definitely the tone from management is really good. Like it seems like they're just like chill out, guys. Like this is gonna just get really good.
Yeah.
Enormous potential. I'm curious about the fourth quarter for her. Can you just talk about unit versus ASPs? What is ASP? Average selling price? Model changeovers. Is there a more price promotion which impacted revenue? Ah, the volumes were still strong. Ah, so they've been just doing aggressive promotions so that the average selling price went down. Shift two in terms of where some of the volume went in the wholesale expansion year-on-year comparison. And if in tariff cost. Oh, the tariffs affected them a bit. Right, but I mean the tariffs are like that whole thing is kind of sizzling out, I think, because it was like kind of like negotiation issues. Do you provide a firm that calls for her to grow mid-teens? Normal environment would see mid-teen growth, we think, with Hoka, and then we'll see. Okay, let's not get deep, but yeah, we'll look into it. All right, Deckers. And that's it. The other ones we include Deckers, GCT, and PDD, and we're not including this weird Chinese hotel social media. All right, next
No, it's
sector.
gross. Yeah.
All right, let's go to value again and now change the sector to energy. Let's see. 27 matches. Voting from PE, we got Civitas, Matador, Equinor, Ultrapar, Sonata, Diamondback. Yeah, what the fuck do I know about this shit? But look at this
Yeah, this
though.
is a hard.
This is growing.
Wait, no. Hold on,
Do
let
we just
me.
go for growth here? Like growth at value? Or
No, with shit, I forgot about. There's
ooh,
something about there's something
oh,
about oil. I think it's most important to know their something about the
like the
rights to
land
what they
rights?
own.
Damn, what the
Yeah,
fuck?
because the thing that the numbers don't show is oftentimes like the potential of where they mine.
Right, like that, like how depleted it is, type of thing.
Yeah, exactly.
But we can check that in like the impairment. I mean, not that we can really see it, but
Ask ChatGPT, ask
we can do that.
ChatGPT.
Yeah. Hmm.
Let me give you a prompt. Like, what are some of the most important metrics to finding cheap oil and gas exploration stocks?
1 second. What are some of the most important factors you say, or metrics, or what?
Metrics, yeah. It doesn't matter.
Right. To look into when valuing what? Energy? Or
Oil and yeah, energy stocks is fine.
energy companies. Pure play, MP expansion, production, renewable. Enterprise value to EBITDA. What it measures, how the market values the company's operating cash flow relative to its enterprise value.
They don't know what they're doing, bro.
Yeah, this is metrics. No, but we mean kind of like leverage coverage ratios, return on capital employed,
It's
production
number
capacity
seven, like,
utilization. Is this what you mean?
yeah.
How do these metrics look?
Actually,
What?
ask it like what gives some energy companies advantages over.
What give some energy companies a competitive advantage? Let's see.
Oh, forget about city, bro.
Aye.
Trying to get a framework.
Low cost asset base, high quality reservoirs, fields with high permeability, pressure, and natural drive. Permian, Delaware. Reserve quality. Yeah, I mean, just the purpose they own, how much oil they can get out of it. Scale and vertical integration.
Yeah. Exactly,
Top
right? So
utility
like now,
technology.
so I ask it like for instance, like what are the most go back what was the top thing that it said? What
Low
was
cost
it?
asset base.
Yeah, what are the highest quality reservoirs right now? Okay.
Well,
Fine.
whatever. I mean, it's gotta be right now.
Yeah, yeah.
Gawar Field in Saudi Arabia. Bergen Field in Kuwait. Permian Basin in the US. Eagle Ford Shale.
Who owns most of the top three?
Well, Aramco, right? Then we have Bergen, which is a Kuwait one. And the Permian Basin. Right, Occidental, which is the one Warren Buffett is in. Or was, right? I don't know. Just
Yeah, where do you see
here, Occidental.
where do you see it? Oh, okay. Not a single field, but a prolific U.S. with approximately okay. Kuwait Oil Company and Saudi Aramco. Yeah, all right. So, I mean, that should tell you everything you need to know.
That's it.
But these, I think, yeah, pretty much.
I mean, in
I
relation to
mean,
what?
that like paired with a Buffett endorsement kind of tells you that this is most likely best in class.
Oh, sure. But I'm saying, I mean, what is the price for that one?
Probably on. It's probably on the screener, bro.
Oxy, yeah, Oxy. That's what it
It's
was.
probably on this. Yeah, it's probably there.
No, it's probably not because it's the PE
I think
probably.
it's, wait, go down, go down.
It's not, bro. What?
I just saw it, no? Oh,
No,
wait,
you
no,
saw
it's
Oki. Well, okay, so where's their? Let's see.
are these all, is that, are these oil companies, are they all drilling or are they also like
No, I think that. I
logistics?
mean, this is all energy. It doesn't have to be. Oil, gas, and explorations. We will look at. There's some other ones that integrated, but I mean, I guess most of them are storage and transportation too, refining and marketing, equipment and
Yeah,
services. So we could just check for exploration, but Civ is there. But again, yeah, it's probably right. What you're saying, right? I think is this company's cheap, even though it's growing, probably because of the reserves. But we can ask.
yeah.
Why is the stock price for Civi down so much? Is it related to any of the criteria you mentioned? Investigating. Little hound. Has been share price pullback sharply over the past few months. Disappointing results and guidance cut. Management noted that production had already plateaued and the hundreds of millions in new acreage would be required. Yeah, so yeah. Good eye, bro. Yes, yeah. They're just running out of oil and the things they have. They gotta buy new land.
Yeah.
10% workforce reduction.
Well, yeah, because they're the basin is dry, bro.
Yeah.
They're about to become a dirt company.
Well, oil price and sentiment headwinds, that's not gonna matter. Especially now with Trump. Once they pass this bill, they're gonna give a bunch of incentives to oil people. But yeah, but then again, it would make sense to buy into Oxy, for example, which is
Yeah, the
yeah, look,
Permian
Oxy's at a
Basin.
good PE. It's just
Yeah,
yeah, yeah, yeah.
why isn't that on the
Look at
list?
this. Oh no, but you said this is not good. Wait, what'd you say?
That's not. What's stopping it from being on that list? Is it there? Maybe it's the ROIC
Oh, what's stopping? Right, Oxy.
on this list right here.
Well, the criteria here is well, it is under 35. Revenue growth, man. No. What am I? What the fuck am I? I'm tweaking, bro. Yeah,
That's
revenue
right.
growth, I guess.
Yeah.
Yeah.
Why?
Why? If I take this off,
No, 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 no. Yeah, sure.
too late. It's not that.
You have to look at. I mean, that's me for all the. You have 3 years.
I took
No,
off
no.
all of them,
Oh
but now I'm taking earnings too. We can always go back.
no, I shouldn't have. Yeah, just revenue growth.
I took both of them out and it's still not showing up. Do
It
they
will be
not
there.
have a profit?
Yeah, it will be. It will be there now.
No, they have a profit. So
It
this?
will, it will be there, bro. It's a lot of results. It's like there's more pages.
Ah,
There's
okay.
125 matches, bro.
Fucking A. I can't go back just like that. Bro. Oh, I didn't. So you're saying if okay, so let's do it again. All right. So I take this off. No, but it's 32. They're not
Yeah,
here.
no,
No, this one's no. To get the revenue growth, it's not there. So that's not the issue. It's not there still.
yeah. How are you looking through so fast? It's you're just going to oh yeah.
I'm a tweaker, bro. I have a good eye, bro. I'm not. It's not there, bro.
Okay. Okay.
Yeah, some things I'm better at. You know what I'm saying? Uh, what could it be? Optional stock? Cash flow?
Uh, maybe, yeah, probably actually.
Yeah, we're still nerding out, Edgar. How did the meeting go? Yeah, it's not here either. And this is yeah, 40 we still got. What the fuck? We're trying to look at this company, Accidental Petroleum, and it's not showing up for a screener for energy. Trying to figure out why, because it's a good company. It's under 35 PE. So trying to see what is it there.
Go back. Stay here. Yeah,
Where?
try that.
W- w-
Net profit margin must be some
no,
48.
but they do have profit margin. But yeah, let's check it out.
Oh wait, no, EPS growth, bro. EPS growth.
So it's that you think? Okay, okay. But they do
Yeah,
have.
yeah.
I
'Cause
mean, maybe they don't actually. Never mind.
they lost money in 2020. You saw that those numbers.
Okay.
I mean, surely. I don't know. That's not. Oh, it's 100. Yeah, it's a lot.
Yeah, here we have
There's
more, but
another couple pages.
yeah, I added more, but it's still not in here. Well,
There's another
wait, they are
page.
at 17p, so it wouldn't be in this page anyway. It's gotta be in this
Sort by
one.
P.
Yeah, I did.
Yeah.
Now we did. Ah, here it is.
And there it
Yeah,
is.
so it was that.
And-
Right, EPS like contracted 30% this year.
oh, did they recently buy these rights?
Let's check it. No, no, Occidental. I remember at first when I was looking into this like years ago, and I wanted to buy, but everybody was buying into because Buffett had just bought it. They like that's the main thing that they've had those rights
Look
for
at
a
their
while.
operating. Look at their operating expense
All right,
in
let's see.
that 2020 year. Oh wait, no, that makes sense because that was the year that oil turned negative. Yeah, never mind.
Yeah,
That
look.
was actually
That's what
It's
you're
crazy
saying,
to
right?
think like how big of like a opportunity that was. I remember, and specifically, it's like I feel so stupid now thinking about it, but it's like when oil turned negative during COVID,
Yeah.
in my head, I had this thought of like, oh yeah, but it will never recover because we're moving towards. And looking back at that now, I'm such an idiot.
On what? On
Because it's
this
like,
company?
what was I thinking? Yeah, no, like so basically, like in COVID,
Mm-hmm.
crude barrels were negative, right?
Ah, yeah, yeah, yeah.
Price price of a crude barrel was negative. Like they were paying you to take barrels from them, essentially, right?
Yeah. That's when
And
Jim
then
Cramer was saying
in
that
my
oil is
head,
dead.
yeah, and yeah, even me in my head, I was like, such a think about it, like think about it now, such a stupid thing that I thought back then, bro. Because it's like, what? Like oil will never go away,
Nah,
and it's
yeah.
like even if like, for instance, even if the way I'm thinking about it, like, oh, sure, that might be true, but
Mhm.
like, it's such a stupid thing when you think about value. It's like oil was negative, bro.
Yeah.
Crazy.
I don't even know. Yeah, was that because of COVID, right? That's what it was. Like there was a
Yeah,
dip in demand. Yeah. What's
yeah,
up, Simon?
right.
We got Simon here. Also, we got Edgar is saying $1,000 in Zins, 1,000 in liquid death. Give it 6 months and you got a 10K. But Zins, we do have Philip Morris into his Philip Morris own Zins, but Zins has its own. Or is this a different? Is this Zins like Zins? There's no Zins. You're talking about Zins, the tobacco thing, right? Or no, Edgar? Or what are you talking about? There's no
Of course.
Zins. Yeah, right. Okay. I
Is it
didn't even know.
Simon? Is it Simon, yeah, and that's not just some random
Godlike Motion
Simon.
is Simon, but then we have Edgar here. I clutch pentacle.
Oh,
But yeah, I didn't know is Zins big in Portugal? Because nobody uses this shit in Spain. I just had one. Like I have my Zins here, but do people use them in?
they
I
use
mean, Sweden. In Sweden they do for sure. But
they use snus.
well, but yeah. So they do
Called
that in
snus.
Portugal too.
Yeah, yeah, of course, but it's global. Look
Yeah.
up
So they.
snus. Like who owns snus?
I don't know, but I'll look it up. But yeah, Zin is owned by Philip Morris. Edgar, we do have them. I do like. I mean, it's doing great for their numbers. Snus like this. How do you spell snus?
No, I think it's with an S. SNUS.
Ah, snus. Yeah, there it is. Who owns them? I mean, I don't know why I'm using Google, but whatever. Well, Swedish Match. Isn't Swedish Match? Yeah, it's the same people that own Zin. And they are owned by Philip Morris. 2022. Yeah,
Ah,
Philip Morris is moving good. Cause yeah, Altria bet on the vapes with Jewel, and Philip Morris bet on this stuff, Zin and Snus. But yeah, they're just getting to Portugal illegally, the Zins. Like 19, 20-year-old importing and selling on IG. But that's interesting though, because I wonder how that's gonna be, because in Spain at least, and I assume Portugal is pretty much the same market. People smoke a lot more than in the US.
no,
But yeah, I wonder.
they have that. They have a version of it in Portugal. Like
Of
for
of
sure. Like there's just nowhere.
oh, gotcha. Yeah,
A
smoking school.
version
But
of
yeah,
Zins. There's a version. There's Velo, right? There's like more brands. It's like every country at this point has a version of that thing of
I
like
suppose.
what is that product even called? Like lip pillows?
Yeah, I mean,
What is it called?
in the UK they call them all snus, like snus or whatever. But yeah,
Yeah,
but yeah,
that's the
like what?
brand that's proliferating in the UK.
Yeah, what Edgar is saying is kind of like what I'm saying. Smoking is cool, but Zins is cringe. That's kind of the vibe I get here in Spain too. But I don't know if that will change because I
Not
mean it
not
is
for long,
healthier.
yeah.
It is the healthiest alternative. And then we have Simon recommend to buy China CCP. All right. So yeah, I mean, do we include Oxy, or I mean, or what are we doing here?
We should keep going because
Okay,
we
just with our
haven't figured it
screener,
out
right?
yet.
Let's go back to our screener.
No, the screener I think is useless for these companies. I think we have to
Oh,
look at more like what we want to own.
but what we
It's
want
like
then
the
then
Permian
Oxy.
Basin is like The Permian, yeah, but what else? Like, keep going. Go
Oh,
back
look
to
at
the
this.
ChatGPT.
Permian Resources Company at 10
Yeah, it's good
PE.
marketing.
Oh, look at this. Great growth too. Oh, what the fuck? Is that great?
No,
One point.
these
What the
numbers are
fuck?
useless.
Okay, okay. Everything is useless to you, bro.
Yes, but no, specifically, these numbers are extremely useless in a real way. You gotta like look. Who else has rights to the Permian Basin?
All right. What other companies have rights to the Permian Basin? ExxonMobil. Oh, but ExxonMobil. Oh, they do. ExxonMobil Permian. Diamondback. Oh, we saw Diamondback in our screener as well.
Yeah, it's called Fang. Right there, you missed it.
All right, one
Now
second. I'll
go
check it
down
out.
there.
Here it is. Fang.
Yeah,
All right, but what does it say? Okay, so we got Oxy, 4.5 million acres. They have like a huge amount compared to anybody else.
yeah, that's crazy. But see,
That's
it doesn't matter, right? Because so
mhm.
as long as they are all allowed to drill there, I think of all these now, look at which one is the cheapest by metric. So go
Diamondback. It
to
seems. A Permian Resources. Look, it shows up here too. So yeah, I think we should look into
yeah,
Permian as well.
go to the top of this page.
Oh,
No,
oh,
no.
oh okay. Oh,
Go to
here.
the other window. Go to the top. No, yeah, but go to the top
Uh-huh.
and then go to research,
Uh-huh.
the research tab, and then go to stocks,
Stonks.
and then go to stock compare.
And now we
Okay,
put them
and then
here.
now populate all those tickers. Tickers, it
Exxon.
sounds crazy, huh? Very close to a
Wait,
no-no
what?
word.
Wait, Exxon? No, what the
Oh,
fuck?
oh,
I'm
oh.
terrible, but I think I'm dyslexic, bro.
Yeah, you
But
are
I'm obviously
excellent.
not. But yeah.
Well,
Chevrons. Well,
it's
I'm
not a
like
good girl.
I'm at the verge. Konoko. Oh, Diamondback. I forgot about Diamondback. Hey, let's just do this one.
Yeah, well, we can only do five. Okay, now here's the thing. You have to do a custom. So go to custom, and now we populate it with what we want to see comparatively,
Mm.
right? So yeah, so here, yeah, there you go. Yep. Well,
No? Wouldn't we want that? If they're buying. I mean, I don't know. No?
return
That,
on equity.
no, not an
No, we
equity,
can
but an
skip all.
investment. Huh?
We can skip all of these.
How about return on assets? No? I mean, okay, I don't know. It's like the asset. That's what
They're
they
all
are, right?
important in their own way. They're all important in their own way.
So let's just put them
But
on.
yeah, okay, sure.
Long-term debt to equity?
All right,
No,
now,
really, right? Now,
it
earnings.
kind of matters.
Okay.
We prefer to have as low debt as possible.
Press to earnings. Press to
Take,
sale.
yeah, oh, relax, relax. My God. Okay, sure.
You want me to
Alright,
take one off? Is there any you want me to take? Maybe this one?
it's fine. It's fine. It's fine. Go down, and
Uh,
then sales growth. Let's look at sales growth
alright.
and EPS
EPS?
growth.
Yeah.
Yeah, it's fine. Let's
Dividend
do a
yield?
forecast. Let's do a forecast of 1 year. Yeah, let's look at yield. Yeah, let's just look at yield. Everything else is not.
Profit margins?
Here we have that profit margin already. I don't think we need any of this
Oh,
stuff.
yeah. That's it.
Keep going down. What's the last thing? Yeah, we're good. All right, show it. Oh,
Okay.
yeah, there you go. That's the one we needed.
Alright.
Yeah, that's the one. All the other stuff is trash, really.
I'll keep
Well,
this
not
one, though.
really, but
Yeah, I get what you're saying,
sure,
though.
sure. No
And
problem.
now, save and view.
Save.
Uh, Oil. 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 Come.
Should have called it Arab money.
Look at this baby here. I'm liking PR, bro. Fang too. Look at this, bro. Yeah, these are the
Yeah,
efficient ones, even though they own
smaller.
less.
Yeah, because
Long
they're
term,
smaller.
right? They have more debt. I mean, Oxy, yeah, Oxy's like heavy, but I guess because they're building shit. Return on assets high too. Earnings per share. Well, oh, but yeah, I mean per share again. That doesn't matter that much, right? P of 8 and 8. Price to
Yeah, the
sales.
small ones are
PRs.
cheaper
Right.
because
It
they're
seems like
perceived
yeah.
as less quality than the big ones.
Price to cash flow also
Like,
better on PR. Sales
yeah,
growth
they're all,
fine.
bro, genuinely, they're all the same.
Oh, but look at.
They're all the same. It's crazy.
I mean,
It's
yeah, but
like,
the relatively the
yeah,
smaller
pay for
ones
quality.
look more attractive.
Yeah, exactly. Well, it's like pay for quality or bigger risks on,
Yeah, but it's like kind
non-quality.
of like I mean, what do you mean quality? You know what I'm saying? You just gotta get the oil out of the earth. And if they have good
Exactly.
margins,
Other companies just have better distribution, better partnerships, more resources, like it's just like less risk really.
but somehow, I mean, I guess
Somehow
we
what?
gotta check out how like the margins are much lower, like
Yeah,
lower. But I
because they're
guess
cheap.
how consistent is that? Simon clipped Arab money. Thank you for the
That's
clips, brother.
we
uh,
need we need clippers.
we need a
Clippers.
clipper, yeah. I thought your brother wanted to be a clipper, didn't he, Simon?
I told his brother that he
I
should
know.
be a clipper because his future is like in question, you know.
I uh I thought we had saved it.
He sent him some like Airbnb scheme the other day. He's like, you should do this. It was just like an Airbnb like course or something.
He wants to be a day trader
Yeah.
now. Oh boy, that's bad.
Yeah, you see, it's just like going down the list of like
He's gonna end up doing
you
like
get a
a
selling
pyramid
TikTok.
scheme, bro. He's getting there.
Yeah, honestly, yeah, exactly. Like it's like a course selling. He's on course selling TikTok right now.
All right, well, I want to include PR. Should we do Fang?
Yeah,
No.
we can include both of them, man. And
All right.
Oxy. We can
And
include
Oxy.
PR, Fang, and Oxy.
What the hell? How does this work?
Moving mad, bro. It's moving mad, bro.
That didn't work. All right.
Absolutely
Fucking
mad.
hey, I'm fucking up like crazy.
Moving mad. Oh, your blood's moving mad, innit?
There we go. Got me. Well, terrible, terrible, terrible. There we go. Okay, energy.
Oh, your blood's moving mad.
PR.
You should probably eat.
Oxy. Bang. All right.
I'm gonna go on the
Facebook,
phone.
Apple, Netflix, and Google. Uh, you say you should eat something?
Add, delete all of them and then add the other ones. There was more that we couldn't fit, and then also add Saudi Aramco there as
What?
well.
Wait,
Like
oh,
get
ones
rid
that
of
are
the
not
ticker.
Permian Basin? Wait, you can invest in Saudi Aramco? I guess, right?
Yeah, of
Oh,
course.
and you're
They
saying
went
to
public.
include, you want to include this ones too? Chevron and,
Chevron and ConocoPhillips
no, we didn't put
and
this in the comparison, but I mean, I guess we could and see how it
yeah.
looks.
What did we not put? We didn't put Conoco, right? And then
That's
what
the only
else?
one we
That's it?
didn't put. Yeah. I mean, I got from the American ones, from the Permian Basin. I mean,
Take out
it's just
Conoco. I mean, take out Oxy and put in Saudi Aramco.
take it out, like don't even include it here. Oh, you mean for the
No,
comparison?
no, no. Yeah, yeah.
Okay,
Because
okay.
we added it, so we're gonna look further and then just.
But what is?
Oh, you think you can just type it, huh? Is that what you think? Oh, that's. Um, I bet you thought that, didn't you?
SAR, Saudi Arabia,
No,
Saratoga,
they have an
bro.
American ticker.
What the hell
No,
is
no, no.
going
They
on?
have an American ticker.
Saudi
No, no,
American
no, no,
Holding? What the hell?
no,
What is
no.
this?
It's Saudi Aram. No, this is the wrong company. It's a
Aramco,
Saudi
Saudi
Arabian.
Arabian Aramco, bro.
Is this?
Saudi
Nah,
Aramco,
but they have a
Aramco.
ticker.
Officially the Saudi Arabian oil company. What are you on?
No, they went public in American markets. One second.
This is it. They did. Right.
It
America.
is? Okay. Yeah, all right. SAR.
But it's not showing up though. 2222 SR.
Oh, I didn't realize you
The
shaved your
fuck?
head.
Oh, you just saw that? Yeah. That didn't show. That didn't
But,
work.
no, SAR, no? Didn't
It
work?
doesn't. No, say Saratoga Investment Corporation. What the hell's going on?
It could be because it's
222.
like a.
Saudi Arabia.
Yeah,
Get on my
anyway, it's fine. We don't
face,
have to do
bro.
it. It's fine, brother.
Tarawu. Maybe it's Tarawu.
No.
Okay, 1 second. What if we go here and I put Aramco,
You can right?
Saudi?
You can hear me?
Yeah, better now actually.
Okay.
Yeah, yeah, it's not. It's just not showing up at all. All right, so yeah, we did the crop here. It's kind of the same thing. Oh, well, yeah, same thing. P of 11 shows growth. I mean, no, well, this doesn't look good in terms of growth. Let's put this back here. Oh, I thought that was the exchange. There is an American stock ticker symbol. Oh, okay. But how can I buy shares of Aramco from you? It's tricky, but not impossible. Okay, so we can't. All right, we'll have to buy like an ETF. I mean, I guess, right, we own something that buys into the sovereign fund of the Saudi Arabia government. It's the same thing. All right, PR, Oxy, and Fang. That's it. And then maybe if I mean, I don't know why we would include Exxon or what is the other one? Or Chevron. Like, it's just like they're not going to be value options for us. I feel like if anything, just do Oxy. But yeah, we're good on energy, unless we want to use a different basin or whatever. We don't want to get into. Oh, I mean, ExxonMobil did show up in our screener. Even though earnings, right, but that contractor receipt. I don't know, bro. I guess we could put ExxonMobil. Yeah, fuck it.
Yeah, I didn't. Our screener again. Our screener is useless though. For this.
What do you useless for energy? Yeah, no, I get it. So we're done with energy. I mean, it's enough energy exposure.
All energy is like inherently cheap, you know. So it's
Yeah.
like a lot of our companies are gonna look good on paper. But we looked at again, like the whole thing is like the Permian Basin is.
Yeah, like that. I mean, the rest we don't care. Like we don't care about oil equipment and things like that. Or at least
Nah,
we're
too
not gonna get
complicated.
into
I think.
Yeah, Chevron's here too, but again, I'm not. Yeah, but if I mean, I don't know. Anyway, yeah, I think we have enough about that. All right, let's change it now to financials. This one's always a funny one. Runway Growth Finance Corp.
Financials? No. Financials needs to be almost entirely price to book.
Okay.
Price to book is like the only metric.
So should we skip this sector for now, or should we change those criteria?
Yeah, we could skip it.
Yeah.
It's up to you. I mean, we could also do it. It's
No. Like I'm saying, we'll get into finances, but just saying so we can use the screener and then we can come back. I mean, I guess healthcare also has a different Or can we use this screen on healthcare? And
Some
healthcare is also
healthcare, yeah. Other
right.
healthcare,
It's like there's
no. Like
different things.
healthcare insurance is the same as it's
Yeah, it's
price to book. Like,
financials. Right. But where is
yeah.
that one? Healthcare equipment and supplies, healthcare provider and services? Healthcare
Probably.
distributors. No. Where would the insurance be? Oh, I guess it's not. Is it in financials? Yeah, oh, it is in financials. Ah, okay. So then, yeah. So then healthcare is good.
Insurance is within financials too, right? Like general
Yeah,
insurance.
healthcare insurance is in financials. So if we just search healthcare, we'll be fine. Centene Group, In Mode, and Fastar Pharmaceuticals, Universal Health. Wait, how is Universal Health now? Oh, services. Did they split at some point? Must have.
You're not you it's health
Jeez.
insurance.
Well, I was thinking United Health actually. I don't know what Universal Health is, but it's services, so this wouldn't be insurance. Davita. Okay, I mean, I don't know how to look at this shit. We
The
have
Vita
price.
makes
They make what?
dialysis equipment.
I don't know what dialysis is.
Dialysis is like when they take your blood out of your body and
Mm,
clean it and put it back in on a rotating basis so that you don't die.
gross.
What do you think about that?
What do you think of this? Net profit margin of 45%. Fuck is
Who is
this?
that?
In mode at a 6 p.
Wow.
What the hell do these people do? Designs, develop, manufacture, and markets minimally invasive aesthetics, medical products. So they're like plastic
I have a
surgery.
lot of healthcare companies that I like.
Lipolysis and deep subdermal fractional radiofrequency
Yeah,
technologies.
liposuction.
Ah, and like a lot of skin tightening, face contouring, ablative skin rejuvenation. These people are making bank though, but why? What is this though? Earnings announcement? They miss. They've been missing earnings. Avoid market edge says. Ooh, yeah,
You better
earnings
listen to
is
market. I'm a
tanking.
good little boy.
But I mean, how can they have such crazy fucking margins? Is this consistent?
I mean, it's lipo, is it not?
Yeah, I mean, don't they have to pay for the tubes? Like, I don't know, 45%. The fuck?
Yeah, people pay a premium. It's a cosmetics surgery, bro. Like people just pay a premium for it.
Yeah, but still, I don't know. Yeah, I mean, definitely is that because, but yeah, I don't know. I don't know how to look at this. Let me open the window. I don't know. I think the air is hotter outside. Stuff. Hmm. Hmm. Where's the name of this? In Mindy. Ah, I see. Too small. Yeah, it's a 1 billion market cap company.
You know, there's a company in this screener, not in this one, but like in a healthcare one that I used to do
Mhm.
that looks so good. And then I did some more research into it, and it turns out it's like a pyramid scheme. That's like also a public company.
Nice. But it works.
Yeah, I remember the name. Oh, Medifast.
Medipass, yeah, that sounds like a pyramid scheme. Medical pass.
No,
Podcast.
Medifast.
Medipass from medical, right or no?
Not fast, like run fast.
Oh, Medipass.
Fast, fast,
Fast,
fast.
fast, 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 fast. Well, I mean, I don't know. They look good. Cash. I mean, good. I mean, what is good? I don't fucking know. Really, that fucking. They are buying new locations, I guess, maybe? Or they provide the equipment. Alright, what is. In-mode revenue streams seem to split into two main categories. Oh, it's Israel based? Oh, maybe that's why the stock tanked. These people are in Israel, bro.
Yeah, there are a lot of big Israeli companies, like startups and stuff.
Yeah, I mean, JFrog is a software company. It's really good, and they're in Israel.
Yeah, same thing with like Wix, like a
Wix.
Shopify competitor.
Ah. Oh, Wix, Wix. Oh, they're Israeli. Nice. Yeah, they're more like Squarespace, aren't they? Like more like website building. But I guess once
Yeah.
no. Okay. It's a base medical device company. Oh, they sell devices then. That designs, develops, manufactures, and markets minimally. So they sell the technologies, all right. So then, okay. So they don't have to worry about them. So then again, how is the margin high? Yeah. Well, I mean, again, but I guess it trickles down. Consumers are paying a lot to these companies, so these companies pay a lot for their technology. Maybe they have good technology. Radio frequency assist enable physicians to remodel adipose tissues, stimulate collagen remodeling. The majority of InMode's revenue comes from the sale of its capital equipment, proprietary RF-based devices and hand pieces. So yeah, they just probably have good. What's that called? IP.
Yeah, what do you? I have like eyes right now.
Yeah, I'm just checking the ChatGPT summary of how InMode makes money, like their revenue streams. They're just the devices they sell. The consumables and services. In addition to hardware, InMode generates recurring revenue from consumable accessories. Consumable accessories, single-use hand pieces, maintenance and service contracts, and professional training. In Q1 2025, consumables and services revenue totaled 20 million, about 26% of total quarterly revenues, with a balance coming from 57. Oh, with the base being device sales. Or the balance, I guess. The other side is device sales. Okay, and how much of a technological more do their patents have? They have 350 patents. That's an estimate. 100 pending. It's considered moderate. Patent portfolio is relatively focused and by most measures provides a moderate but not overwhelming barrier to entry. As of February 2022, on 6 issued US patents, 1 issued Korean patent, 14 pending US. InMode's core radio frequency-based treatment methods, which projected expirations in 2027 2038. IP by acquiring all the intellectual property assets of Vivev Medical and their patents of women's wellness technologies. Most of InMode's patents are method and apparatus claims for specific RF delivery techniques. These patents secure exclusivity on key treatment modalities. They tend to be narrowly tailored to a most unique pieces of science to improvements rather than broad platform claims that could block all competitors from using RF energy. Large medical device competitors, Allergan, Syneron, Candela, typically maintain dozens of issued patents and related energy-based treatments. Overall mode assessment, strength, patent protection on key clinically validated treatment, strategic acquisition of Viva, limitations, relatively small number of patents, narrow claims. Okay, I don't fucking know what I'm looking for, really.
I'm back on my PC.
I'm back on my PC. I just don't know what to do with this one, or any of this, really, but, like, it looks... Okay, let's just say, let's ask, why is stock down? Because it is, right? Yeah. Well, yeah.
Dog shit.
Earnings and guidance. Analyst downgrades and lower price targets. Eroding short-term catalysts. A seeking offer review noted that some of the near-term product and geographic expansion guides that have buoyed sentiment in late 2022 had largely vanished, leaving investors able to drive multiple expansion. Free cash flow concerns. Yeah, okay, I guess it's just dog shit, yeah. All right.
Yes.
CNC machining. Centene. Fucking now, bro. And fast.
These are sorted
by P.
These are sorted by P.
PE.
Molina
Molina.
is cheap.
But what do you like about it? Like,
I don't know it.
What about Genmab? Crazy profit margin. I mean, this looks kind of...
It's sketchy.
Biotech.
Biotech, yep. Very good. Mm-hmm.
Is it gene? Oh, it's some gene therapy, well, therapy, whatever.
Probably.
There was antibody-based products and product candidates for the treatment of cancer and other diseases in Denmark. Marcus Epinkley, and Tepkinley for adult patients with relapse for refractory diffuse large B-cell lymphoma. Large B-cell lymphoma. Follicular lymphoma. And Tivdak for adult patients with recurrent metastatic cervical cancer. As these people cure cancer.
Oh.
So they take care of cancers with, I don't get the gene thing. They're just antibodies. They sell white cells. That's pretty cool. But again, okay, why is the stock down? Okay, and why is GMAB down? So
I made microwave eggs.
oh, I've heard of that. That guy, Andres or something, like a Spanish cook, was in Joe Rogan saying it's like you mix it with mayo. Is that how you did it? You mix it with mayo and you put it in the microwave, or is it different one?
No, I mean I just put them in the microwave.
Yeah, look, this is what I'm talking about. Jose Andres, Joe Rogan, eggs.
One day, I had to make eggs very quickly. Daddy, we only have 3 minutes. I have a meeting. I have this. I have that. Okay. I get the eggs. I have mayo. I mix 1 egg with 1 big spoon of mayo. Mayonnaise.
Mayo.
I whisk.
Mayo.
I put it in a shallow kind of crystal plate. A little bit of fat. I put oil and butter, I think, a little bit. I put that egg mix of mayo and egg. I put it in the microwave, 30, 40 seconds. Oh my God, Joe. The best omelette in the history of mankind.
Really? Microwave omelet was the best omelet in the history of mankind.
Well, I mean, listen, I in Spain we say I don't have a grandmother anymore. My grandmother is dead. You know when you are the one that you give, you say how good you are yourself, you say you don't have a grandma. It was so good. Fluffy, egg on,
Sidetrack.
egg on oil together.
Right.
That emulsion of mayo and egg that has so much air was like putting a lot of air inside the egg itself. Oh my God.
Oh my
Try
God.
it. It's the quickest omelette.
I gotta try it, but yeah.
It sounds like he just put a bunch of fat, and that's why it tastes so good.
I mean, maybe it tastes good. 30 to 40 seconds.
Bro said he put mayo,
Eggs, butter, and oil.
and oil.
It has to
But
taste good.
obviously, it can't taste good, bro. Like what?
Simon saying Molina is
Oh my
insurance.
God.
But this shouldn't show up here if it's insurance then. Interesting, let's see.
No,
Maybe it's
they're-
like some of them
they're
are maybe divided.
yeah.
Like they have, yeah, but look, yeah,
No, they have
Medicare,
healthcare, yeah.
low income families, individual managed healthcare. No, but it is the care, right? But it doesn't matter. They're like, yeah.
No, but
like,
they have insurance. Bro.
but they're like linked to Medicaid, so they're like Medicaid providers, I guess. Like Medicaid paid them to provide the healthcare. So they're insured.
Uh-huh.
Nah, cool. I don't care. The G map. Oh yeah, let's see what's down. Q1 2025 revenue shortfall despite EPS beat. And deliver EPS at 31 cents, topping 23-cent consensus. Damn. But revenue 715 missed analyst estimates. Okay. It's kind of between stronger than expected profit and softer top line growth raised concerns. Broader biotech sector headwinds. Investor sentiment across biotech has soared amid political and macro uncertainty, ranging from proposed NIH budget cuts to FDA staffing layoffs, drug pricing reform talk, and persistently high interest rates. Blah, blah, blah. Sector-wide capitulation, regulatory and pricing policy fears, the reinstatement of the U.S. most favored nation drug pricing policy, which could force U.S. drug prices down to the lowest OECD level. Unsettled investors. Pipeline competition concerns. Lilly unveiled a promising folate receptor therapy that overlaps with gene maps. Right? Yeah, I mean, it's just outside of my understanding.
Avoid biotech like the plague, bro.
Okay, makes sense because I have no fucking clue what to do with it. I mean, should we do anything with healthcare?
Yeah,
What?
I like a lot of healthcare companies.
But you're talking about insurance, no? Or
I
well,
like
HIMSS.
one. I like him. No, I like Oscar, and I like United Health as well.
But Oscar is
But it's only
insurance.
because the CEO just got murdered and the stock went down a lot.
That's a good point. Like buying into that because what the hell does it matter that the CEO got murdered?
Yep. Exactly. That's real value
So Etis, why do I know this company?
because they're big.
What do they do though?
I'm pretty sure they're
Yeah, but-
Spanish.
Animal health. Oh, these are the people that make the. Yeah. Exactly. Those pills that you give the dog to keep the bugs out. It's not called.
Ticks.
Yeah, it's not. I don't know. I forgot the name. Parsippany. That's a name. New Jersey.
It's
Swine.
also a healthcare company.
Right, but for animals, really. Animal health, that's all.
Is it?
Yeah.
Oh. I swear they make like I don't know.
Well, your mom is a pig, so maybe that's fine.
Well, my mom catching strays, bro.
What's the thing about United Healthcare? What is the thing about United Healthcare?
UNH.
UNH. Damn. Yeah. Big
Oh.
hit. P ratio of 12.
Oh, yeah, brother.
Let's just put it in there at least.
This is best in class. Trading at 12 P, like it's incredible.
But you don't
This
have
is
it in your
incredible
stuff.
stuff.
Hell.
No,
not?
but I probably should. Really. I
Let's
think I
see.
went down a similar thing that you just did, where it's like I tried looking into it, and their business is so fucking complicated. And I was like,
Yeah.
oh my god, bro,
But
fuck all
again,
this
yeah,
shit.
with a low price like that, also for no reason. Like that's not a strong reason to tank the stock.
No, not at all. That's what I'm saying. Like it's,
Like look at this
but
shit,
it. I
bro.
mean, obviously,
Yeah,
yeah, yeah.
kind
It's
of,
it's
but
insane.
that's okay. Okay, let's ask.
No, I'm telling you, this is good. This is good shit. Like if this is like a, this is like one of those things where like you don't even really need to know what the fuck they do, because just that they are best in class,
Mm-hmm.
and that the stock price did get clapped simply because the CEO was murdered. I think also though that they did also just pay like a big settlement or something like that.
Sector contagion from Centene's guidance withdrawal, which is also probably why Centene showed up in our screener here at the top with that low PE. Let's see.
Something pissed on
Well, they didn't really tank like crazy or anything like that. So roughly 5.7% that day. And we're going like leadership shakeup and strategic review. Some to the earnings miss. Wait, this guy's missing something here.
Yeah.
Yeah, this guy's missing. I think he just doesn't work with recent information.
I don't think he knows
Yeah, he doesn't know about this
how to
part
tell
here.
us that the CEO got murked.
What do you think? What is the current share price? Let's see if we can get him to get to the fucking reason. Yeah, why the huge drop since April 16? Why the huge drop since? 50% into early June. I mean, it says here Q earnings miss. But it can't be, bro. They missed like 9 cents.
By 9 cents. Well, because the CEO quote unquote
Yeah, I know, but
departed.
I feel like he doesn't want to say.
Yeah. Yeah.
Also announced abrupt exit. Andrew Whitty's abrupt exit. Is he talking about the murder? Is it a different one? CEO
You mean an
departure.
abrupt exit from life, or
Is this the guy that got killed or not?
ask you like where did he go? Where did he go?
Wait, I'm confused. Is this a different guy? No, but this is a different thing. I probably replaces
No,
CEO Andrew Whitty.
this is not the guy.
And this is May 13th. We resigned for personal reasons. Death. No, it must be a different guy, bro.
Just type in who was the UNH executive that got murdered?
Who? UNH executive. Oh, who? What? Alright. What UNH executive? God, murder. Brian Thompson, CEO of United Healthcare. December 4th, 2024. So it is a different reason. Oh, wow. This is a different reason, bro. The stock for the
Bro.
shot was here. And not even, I mean, didn't
Yeah,
even
yeah.
turn. December 4th, yeah, okay. The December 4th is about here. Yeah. But now this is a different reason, bro. This is because they fire whatever the CEO stepped down. Well, in May. Again, I mean, I don't
Yeah.
get it though. So it is not because of
Still,
that,
yeah.
but then But this is like outsized reaction. As withdrawal of guidance. Yeah, so first it went down 22% because they missed earnings. Then it went down another 18% because they kicked the CEO. Medical cost pressure. Federal investigations and regulatory overhang. Reports surfaced of a Department of Justice probe into UNH's Medicare billing practice. I mean, but this is probably because of the whole media attention.
Yeah, that's what I'm saying. Like, not directly, like
Allocation
they didn't come back
incentivized nursing homes to
CEO.
avoid hospital transfer.
The CEO dying put them in the fucking spotlight
Hmm.
of all this shit, you know?
Yeah. Drug pricing reform. Yeah, I guess, but
No.
don't you think?
I think it's good. It's good stuff. Worth taking a further look.
Oh, you're saying that. Okay, never mind. Yeah, okay, yeah. All right. We included it. All right. Enough. Now, Centene. What? Oh, this is the Medicare, Medicaid thing, too.
No,
I mean, Morningstar gives it 5 stars.
wow.
Withdraw 2025 guidance adds uncertainty to near-term prospects. Why it matters. We estimate that risks in Centene earnings per share could extend beyond the 275 currently quantified by management. We are lowering our fair value estimate for no mode Centene to 84 from 92, which is still much higher than current price. And these developments, which cut the company's near-term profit prospects, we suspect Centene's earnings may not bounce back fully in 2026, as long as a substantial majority of individual plan rates will be adjusted. The risks have risen. In our opinion, we're increasing our uncertainty rating to very high from high, given the company's near-term execution concerns combined with significant debt leverage. Another group. So it seems like the whole industry is kind of going through this hiccup because regulatory attention. The regulatory found another high single-digit percentage of share value could be at risk if Congress crosses the finish line with its budget reconciliation bill. The House and Senate both narrowly passed different versions of these bills, but still need to agree on terms in both chambers. Bulls say Centene represents a counter-cyclical investment opportunity in managed care, as it can benefit from economic downturns through increasing enrollment in its Medicaid and individual exchange products. With a focus on government-sponsored programs, Centene could eventually benefit from potential U.S. policy changes to reach universal affordable coverage in the long run. Centene's 12 to 15% long-term earnings growth target puts the firm near the top. Per se, Republicans are taking aim at Centene's Medicaid and individual exchange strongholds as avenues to reduce federal spending, which could cut into the company's profit. Centene faces increasing competition from commercial insurers. The withdrawing 2025 guidance, Centene's near and long-term earnings power appears more uncertain than usual. I mean, I think we should include it, just even if it's just as a comparison to UNA.
Yeah.
All right.
You put the wrong ticker, I think. Oh no, you didn't. Wow.
Yeah, for the first time.
Yeah.
Uh-huh.
I think we can be done for today.
Yeah, we are at the
Or you
3 hour
want to get
mark.
through? You want to get through?
So for the next
Yeah.
show, we'll look at the rest. We'll be done. Industrials, IT, materials, real estate, utilities.
Yeah.
Yeah,
But
that's
you know what I
probably
want to do? Real
what.
quick?
Hmm?
I want to do a fun. I want to do a fun one, real quick.
Okay.
Just out of curiosity.
All right, let's do what?
Save this. Oh, did you save
Well,
it?
this is saved. This is our common screener. We're just changing the industry. But yeah.
Okay. Do a completely new screener.
Okay. No.
All right, now go to valuation. Now do price to earnings trailing 12 months. And then hit 25 or less.
Oh,
Between 0.01 and 25. This will give us the negative ones. Okay. Now do
I mean, let's do it. I mean, whatever. Yeah, well,
yeah, it's fine. Now do price to earnings FYF between 0 and 15. Or, yeah, 15. Okay. Now do debt to equity. So now go to, well, actually, no, stay here, stay here. Price to earnings growth of less than 1.2. Um, Now go to financial strength. This is where debt to equity. Um, Less than 1 and no debt.
no.
Now go to company performance. And now do earnings per share growth history. Do last 3 years greater than 15%. You can just click all 4 of those. Or yeah, whatever. And then go down on the left. Oh, sorry. EPS growth like next year. Most recent next year, like current full year versus next full year. And do okay, greater than 15%. Okay. Why does it say 8, but there's only 3?
Why do you say there's only 3?
It says view 3 matches.
Oh, I don't know. Should I click on it?
Go up. Wait, no, go up. Up. I suppose not. Just click it, yeah.
It's 8. Okay. 17.
Nah, something
17.
is wrong. Look,
What?
it's why
General
is it?
Wait, it looks like it's all healthcare.
Yeah, something is wrong. It's not all healthcare, but yeah, why is it populating? You're on the my saved screens, bro. I think it's like
No, bro. This is my safe screen. But this is the screen criteria. What do you want me to do?
on a basic on
What?
the left,
Oh,
but like sectors and industries.
select all.
Clear all. Huh.
I guess a lot of them are
What?
insurance. A lot of one semiconductor here for solar, but most of them are insurance. That should tell you metal mining. Financial. I mean, yeah, it just happened to be a lot of overlap, I guess, because of this regulatory risk or whatever. That's wild, though. It's mostly insurance and healthcare.
No. Something.
What is?
I'm saying.
You want me to add like revenue growth next year or something like that? No, I mean, it wouldn't matter if it's EPS growth.
No, it wouldn't matter. So good.
Yeah. Hamilton Insurance Group. 7p. What is the dividend yield for these people? Oh, none. Molina. Yeah, it seems like those ones are hit because of the Medicaid raise. Then Genmab. Arch Capital. Fucking up my neck, bro. I'll go get water, be right back. All right, well, should we call it a show or you want to do something like look at something else from this
Just
eight?
wait. Just wait.
Yeah, okay.
Just wait, bro.
Gotcha.
Oh yeah. Look at that.
Yeah, look at that.
Look at that, bro.
Look at that. Just look at it.
Look
Okay.
at that, bro.
The fact that so much is this sector, is that what is blowing your mind?
Yeah.
I mean,
Add
again,
First Solar. Add First Solar to the list because it was supposed to be in energy, but it's
it's
not
information
traditionally
technology.
energy. First Solar is a solar company, bro.
Well, but they sell solar panels, but that wouldn't be energy. Anyway, you want to put it in energy, we'll put it in energy. It doesn't really matter. If it's
Why would
allowed.
it not be energy?
Because it's not. They don't provide energy. I mean, if they provide technology for people. Anyway, I guess. I don't know. Like, I don't think it's comparable, but. Like, I mean,
Let's think you're so
I
cool.
guess maybe it is. I don't know. Yeah, okay. And that's, yeah, well, this we'll check when we get to industrials, I guess. And look at this shit, brother. But this is probably, I mean, this is probably not even something interesting because it's probably just because there's that demand for gold.
Did we ever put Tyson Foods into the consumer staples category? No, right?
No, it's not there. Oh, shit. You want to include Tyson for some reason?
Yeah, the
What's the ticker?
TSM.
All right.
Hold on. TSN for solar. And we added Centene.
Centene, yeah, we have a CNC.
All right, cool. I'm happy with that.
All right. How about Gmap here? I mean, should we add it? We looked at it, but then I was like, it's too complicated, or like I didn't know how to what to do
Yeah,
with it.
I mean it's biotech. I don't know.
Right. Yeah, that's okay. Yeah, I mean, we're not
You can
gonna know.
add
It's
it.
like
I
a
mean,
patent type of thing. Sure. It is the
yeah.
first screen anyway. Right. Gmap. We only have 3 healthcare anyway. Might as well 1 be tech.
Well, there's more healthcare, but they're in my list. You know.
Yeah, Oscar. Right, you're right. Oscar and Hims.
And LFMB.
And what Elf is not? No, what is LFMB? Yeah. All right.
From the
All right. Well, that's it. Thank you guys. Like the video, subscribe, share it, leave some comments, and that's pretty much it, right?
If you got to this part of the video, type the number 69 in the comments.
Yes. Okay. Thank you guys, and God bless you.